up. I gotta do that too. Ah, shit. Yeah, we ain't going nowhere. Or maybe we'll close the gap. Check 1, 2, mic check. Book map. It's like nobody trading today. It's like 0 traders. Now, what do we got going on here? Restart that. Save that. Hey, what's going on? Just a second here. Hang tight there. Let's go over there and we turn that off. Sorry about that. I've got a test or a speed test up. So I've got we had some flooding here where I live. We had a major storm come through yesterday, and I lost power. I got new headphones on this morning, too. So we lost power yesterday. I put a generator on, and we actually flooded. My house flooded last night, and my internet has been down. It wasn't really down. It was like up, and then it was down, and then it was at like 5 megabytes or something like that. It's back up right now running. So I did do a hotspot this morning to get some charts up to you, but I can't stream on my hotspot. I don't think that I can, mostly because of all this other crap that I got going on. We'll play it by ear. My power is back on. Internet was off, like spotty at best. So basically off. And it looks like it's back up and running. I just ran a speed test a little while ago. I had 400. I don't have the 1 gig that I normally have, but I've got like 400 megabytes per second or whatever. And that seems like it should work. If you find that the stream is laggy today or you can't watch it or something like that, maybe switch where you're watching. If, let's say, YouTube is lagging, go to Twitch. If you're on Twitch and it's lagging, go to YouTube and see if you can get a better experience. And this, I stream elsewhere, too. I stream to Twitter and a few other places. I forget. So if you try somewhere else, you might be able to watch the show in better quality. And this kind of sucks because this is going on as we're dealing with Liberation Day tariffs, all of this other kind of stuff. So it's a challenge. This whole week's, but I think this whole week's been kind of like I feel like I've had bad karma or something. Like the whole week's been against me. Everything's going wrong that can go wrong. I had problems Monday with a second studio. I got so angry about it that I bought a whole new studio. I was just like, fuck it, that's what we're doing. I'm not gonna half-ass this. And then of course we're getting biblical flooding, and it's like yesterday when I went outside. It was like thunderstorms and confused wind, and it was cold as fuck. But I'm like, it's cold. And then today it's like 70 degrees outside, and it was cold like it was gonna snow. So we're having like weird mixed, I don't know, Wizard of Oz type shit going on where I live. We have major flooding damage here too. Like the whole city, well, not the whole city, but parts of the city are basically still underwater. I think it's all, it might be on the news. I'm not sure, but I showed you that map yesterday of the wild ass weather, and I think it was like snowing on the Great Lakes and then turning into rain or something. Maybe a hot and cold front that had collided or something like that. At any rate, I'm probably gonna have to do a claim with the government or my insurance, like for damage. I've got water in my house inside. What's crazy too is my house. When I bought this house, it had like a floating basement, and I don't know if you understand what those are, but basically it's not connected to the walls, so I had to trench all that and make it one basement, right? And then I ended up also putting in a membrane outside with a concrete apron around the edge of my house to keep water out. It's done a good job. I'm betting that if I didn't do what I had done to seal the basement, my basement would probably have 2 or 3 feet of water in it. That's how bad the flooding is here. So, anyways, it's what it is. I do have drains. I've got French drains in my house, so it helps to have those if you do get intrusion, that it goes into those drains. So I guess I could cut myself lucky or whatever, but at any rate, that's where we are right now where I live. Things are kind of shitty too, like the stock market. We need to talk about the stock market this morning too. We have a lot to go over here and to unpack. When I'm thinking about the naysayers that say this isn't going to happen and that's not going to happen and this is not going to happen and that's no way that happens, and it's happening. And the more people that know about it happening, the more fearful they become. Now, they're not getting any relief. I saw overnight and into this morning that there's panic. People are scared. They're self-realizing that the threats are not threats. And this is not Trump 2.0 tariffs. This is bad, right? You know it. I know it. We all know that these tariffs are not pretty, right? And some of the intent behind these tariffs is to not only create a recession in the United States, but what do you know about recessions? If you were to know anything about a recession like the year 2000, 2001, 2007, 2008, who must participate? Because you can't have a recession unless the world joins in on the recession. And you have to, if you're planning a recession, you need to do what? You do tariffs. And tariffs can create a world recession. Let me turn that off. A world recession, believe it or not. And you're now shaking up like I always say I'm stirring the shit pot, or I'm poking the chickens in the hen house, right? I'm like, yeah, I'm just stirring the shit pot on Twitter. This is that same action. This is, telling the world we're going to create a recession and you're going to party with us. You get what I'm saying? So there's absolutely some fear out there. People are going, oh, wow, what's going on? And we'll go over some of that, those blanket tariffs this morning. I'm assuming most of you know most of this stuff, but at this point, but we'll go over who's been tariffed, who has not been tariffed. That was kind of humorous. And then we'll go over the impacts of those tariffs and counter tariffs and trade war and all that kind of stuff. And I don't know what's going on here with Bookmap. Bookmap this morning is not showing any prior data. It's not because I didn't load it. There's like nobody in the market today. There's no like inspiration for volume in the market from participants. And we'll go over all that stuff like tariffs and who got tariffed, who didn't, the Penguin Island bullshit, how they figured out who they were going to tariff. That was a disaster. They literally ran it through artificial intelligence. It's a disaster. They're tariffing countries that don't have people on them, like islands and stuff, which is kind of ironic. And then we're not tariffing Russia of all countries. I think that's kind of fucked up. We're doing a trade war with the world, but not North Korea, not Russia. Get out of here. And we're going after China too, right? Like in a pretty big way. We'll try to count some of that stuff up here this morning and see what those impacts are going to be and how that impacts our economy down the road and likely the stock market too. And what impact that has, and also some other stuff. There's like some of this stuff, like it's very multifaceted what is being attempted right now by this administration. And there's short-term and long-term possibilities. You can't realize them right now, but maybe we can try to like delve or dig a little bit into this stuff if we have time today. In the expectation here, and one of those expectations is, revaluing the dollar, right? If you revalue the dollar, what happened? We can keep this simple. If you revalue the dollar, let's put this in your head. So if I stop printing money, right? We stop printing money. We start doing cuts, right? And the dollar has value again. What happens to stocks? They get repriced, right? We need less dollars to buy stuff with. A dollar is more valuable and truly valuable, not this like fake value. So that's a simple way to look at it. You'd see the stock market get repriced, right? It's not anything you did or sentiment or any of that other stuff. So we'll talk about where the stock market's heading. Yesterday I was on a phone call with somebody, and we were talking about an attempt to bring us back to the 1950s and 60s. The big question, of course, is, does it send us into a depression? Does it set us up for World War III? Because there are things out there like that, right? And then it also sets us up for a trade war that's very similar in some respects to COVID. If there was a wake-up call during COVID, it was what? If shipping is stopped or slowed, the U.S. grinds to a halt, right? So if the thesis here is, well, we could get into a trade war with China or a cold war or a hot war, and it could impact the quality of the United States, you at least do some of this manufacturing here if you can. Now, I don't know if they're going to be able to fall through with all this stuff. The one thing about the United States of America in particular is we can swing wildly in what we're going to get done, right? Even if we start down a path, does not guarantee that we're going to continue on that path in 2 years or 4 years or 8 years. So you don't really know. That door could be shut, though. We'll know as we go through the stages of this process. We will know at inflection points in the economy and in policy the impacts on our market. So let's take a quick look at the SPY really quick. We'll go through in the background. What I'll do is I'm going to finish Qs, IWM, and DIA. I would try to upload another brief to you guys. My internet is too slow. It's not doing it. I do have a brief written. I'll post the charts to it right now so that you guys can have a brief, where to expect, where we're going, that kind of stuff. But in the short term, let's take a quick look at this one right here. This is SPY right here. And let's talk about a few things here. We had this low back here, right? Let me just draw this in right here. And let's talk about what happened last night, right? We first blasted down right here, right? This was after the bell. This was realizing that the tariffs are blanket. They're pretty bad, right? Especially China. I think it's almost 50%. I'll check, but might even be higher. Maybe it's 80. I've got it typed out, so I'll show it to you. But at any rate, we blast up here. We continue to the downside, right? On trend. Down here, blast all the way down right here. And we're back revisiting these lows with a new market low. I might add it 538. We also, you can see, right, the moment we broke down through, I want to show you this. So yesterday we were talking about this low right here, right? You want to watch the overnight and see if we pierce. We did, didn't we? And what did we automatically do? We went wham straight down, right? And then we came back here in the morning and we blasted straight down again to 40 and slammed into 40, and now we're coming off of it. Now, we got some stuff to talk about here. We've got some structural issues in the market. When I showed you that chart yesterday about breaking down here, what happens? Now, number one, we're not have to deal with, but we've got a giant gap, huge one. It's right here. It's all this gray right here. Is a massive, massive gap. There isn't much resistance up here. These two 1 hour bars on the half and the hourly are not that destructive, I should say, or I want to say. They're not as vicious as they look. It would be nice to see this gap get closed, but we have issues below. And I want to show you those issues really quick. First off is we have a gap down below here. This is the target that I had for you yesterday. If we began to break down up here, that we're targeting lower. So we've got a gap below at 535.04. We have another gap here at 531.26. And we also have a monthly bar here. This is the next target down below, 529.07. And it gets even sketchier. There's another gap and target lower at 500 down here. All of this stuff and where price is right now, this looks close enough that we should clear this up sooner than later. So we'll talk more about where we could possibly be heading in the future. Give me one quick second here. Are we going to have more down? More than likely. Hold on here. There can be an argument made that this is the bottom, but I'm not super impressed with that idea. And I want to show this to you. I'm sure there's a bunch of people out here that are telling you that this is as low as we're going. I highly doubt that. I think we can easily trade into the 20s. I think trading all of this is on is in play for us to trade all of this sooner than later. And we're going to chat about it right now. And I'm going to show you, we're going to scale out a little bit. And I'm going to show you on a daily basis, fundamentally what we've fucking broken and where we're headed. And the key part here would be to be looking at, or the key point here would be to be looking at this, or a few key points would be looking at, hey, are we going to break out and get up here and out and away, right? We got a little taste of it yesterday with the old guys. They told you, no, we're heading down. Ooh, we just went straight down right here. We should make one more leg. We should make at least one more leg. I want you to think about where we are with price. Hold on here. Let me put the fucking old guys in here. Let me put that bar back up here for you so we can take a look at those guys. All right, in here. You could even do this like this if you wanted to. It's up here. It doesn't really matter. But they're right here. We could draw it just like that from the top of the key. These first sellers, right? And we'll do another one right here to the downside. And what I want to show you that's important here is if they told us yesterday, the answer is no. Way is lower with that kind of force. And let me just show you this. We went from coast here to coast all the way down. The idea maybe you're thinking is, yeah, we're going to go right back up here and we're out of here, right? These old timers are probably telling you the way is lower at least once more, and we'll come back and attack again. So let's just type in these old guys right here, and there's a reason I want to type this in for you. What do we call these guys? The old gym bros, right? And this is fairly basic stuff here, right? These are the old gym bros. We had them on the show yesterday. And we were looking for them. We were looking for them to provide some supply up here yesterday, and we got it, didn't we? We actually got it at the end of the day. We actually took this trade here because I was like, we got to go up there, man, and mess with these guys, and we hadn't done it yet, so we did. We went up there, and they stepped right in like nobody's business. And I want you to think about this. It was an auto sell, like straight down, unloading on you here, right? Just unloading. So if that's the case and we're in trend down here, I would expect that even if we come back up here and close the gap, that they're going to likely want to step back in again, either here or even lower and tell you, no, I told you lower. I should write that, but told you lower. Now, we're going to discuss this really quick, like how this matters and stuff. So if they're going to tell you here that we're going lower, even though you made that nice little wick, we probably have some unfinished business down here. So what's the unfinished business? Unfinished business is all these gaps here, and we also have monthly trend down here. And the more important thing here is this. The two important things are this. This is a monthly trigger, and this is trend of the stock market. If price, and this applies to stocks, ETFs, doesn't matter. Any symbol out there. This is a bull market. As long as we stay above this blue line right here. Hang tight here. So this is a bull market. We know, and we're going to assume, and these people have told us, Besant, Musk, Trump have told us what they want to do multiple times. These guys have been upfront and honest. I read an article yesterday of some guy, Sean, whatever his name is. He's a good guy, but he was like, we can't trust these people. And I'm like, yeah, you can. They have not lied to you at all. They've told you publicly, we want a recession. Musk point blank told you we might have a year and a half of 2 years of recession with what we want to do. And then I'll try to save the market. And my point is twofold. First question is, can you create a recession? And second one is, while you're attempting to save the market after that recession, do we slip into a crash and a long-term decline? And not only that, do we turn into, even when we go back into the next bull market, are there way, way lower returns? Those are all questions that need to be answered. And right now, we're not in a recession. I know you think we are, but we're not. We're still not in a recession. Price would need to do two things, or three things, I would say. We need to check that monthly trigger, right? And the second point would be, do we slip under that monthly trigger? And these are very important things. If we break through here, we're checking to see if we're still in a bull market. And the second wave lower, if we get it, would tell you automatically we are now in a recession. And we're going to stay in the recession as long as we stay under this monthly trigger. This is bad news if this happens. This is very bad news. And these sellers up here are likely banks and institutions And what they're doing is they're forcing and they're being punitive and forcing the issue with Trump, the Fed, and you and I and everybody else that's out there, companies and all that kind of stuff. They want to know, does the Fed step in? They want to know, are we going into a recession? They're panicking. I mean, basically that's what it is. It's not, I want to say it's punitive, but it's not. It's more like, fuck you, we're risk off until you either say we don't want to do the recession anymore, and we'll just play ball with you. You really want a recession? We'll give you one. Does that make sense? We'll just exit the market. We'll just get out of here. We'll come back and play in the stock market when you guys are done fucking around. So that's what this is here. This is panic. This is selling. This is degrossing in the stock market. Now, we're not down here yet. We can always come down here if they're going to be punitive and tell you, let's go check and see. And we've got gaps to fill down here. We're pretty close, right? Why would we leave these gaps behind if they're here? We're already here. So we should sweep these things up and at least check and see, right? That's what they want to do. They want to create a recession. They want to create a crash. We're going to get one. Almost positively sure that we're going to get one. And further to that point, if we're in this jackknife correction 1, 2, and 3, right, this leg up here should also close to equal that same leg to the downside. So I would expect us to continue down here. I want to show you this really quick. And I'll give you a date for it too. Right there is the target. I don't know if we can get all the way down to 500. What I will tell you is this, that a decent place to be looking here is on 0s and 5s. You might be like, oh shit, Cap, I didn't think we were going down that deep. We'll take about half of it and give that as a target here. So we're going to go right here at 520 and have that as a target. Hold on a second here. Hang tight here. I don't know if we can get down that low, but this is April 25th. This is the end of April, and as a matter of fact, what's shocking, let me bring this a little bit farther. But so it's not April, it's April 28th. Coincidentally, right? Coincidentally, this trend is lined up for what is considered to be the last day of the bear market or seasonal weakness. Normally around the 15th of April is seasonally the weakest you'll get with stocks. So if you saw it, let's say you had your favorite stock out there, it should bloodbath first and then begin to recover as it takes off. Your ETFs would wait until right here. Wham! Slam down on the 28th and then ricochet higher. So I said 520, but let's be honest. Let's get rid of this right here. I'll give you this. Focus on this 520 here. This is important. It could be a bottom 520, but all this is kind of lined up, right? I mean, look at it. There's the target. There's the gap. April 28th. This seems logical to me. We're testing closing all the gaps. We're testing the monthly trigger. So that would be a reasonable target. Okay. So we're going to keep this as a target. This gap down below. Now, what I do want you to understand in this is that we can not go down here too. So we have plan B too. So this is like plan A right here, right? But at any moment we can turn around and head higher and escape. So I want you to keep your eyes on these old gym bros here, right? At all times. I want you to be watching these guys as we decline here. And let's say we catch a bounce on this white line, right? Which we're doing this morning. You see us bouncing here. If we at any point are able to break out, let's say we close the gap, right? We back test the hourly trigger. Bam, back up in here. This bad boy right here turns right up again, right? And if we see price having the ability to break out and get up there to that weekly trigger, see that right there, and successfully back test, we start breaking out of this trend. We can then have the conversation about heading higher and away from this. If we've priced this in, you will see this action either here, down here. You'll see the same kind of attempt. And the same attempt even lower. Makes sense? Like these gym bros down here. Wait a minute. Did I fuck that up? I don't know. I might have fucked this up. Hold on. I think I'm dragging this off of. Oh, there we go. We're good. Something going on here? Hang tight for a second, guys. So you've got this move here to the downside, right? We'll track this the whole way. This is our playground right in here until we get out of it. And until we get out of all this, right, we're going to play around in here. So we'll keep running around. If we break down below here, too, let's say we get down here, whoop, right, slip right back in again. Uh-oh, right, try to get out again. There goes your old gym bros. We start slam. There's 520, by the way. And then we'll, of course, start slamming down into that other zone down there, or likely. We'll see if we can hit all this. If you want to snip this, you can. You want to just snap that so you can say, yeah, there we go. There's the there's April 15th. There's April 28th, right in here. And I think the 31st falls on a Monday or something like that. Let me check that, but I want to see here. April 3rd. No, it's on a Wednesday here. So the 28th would be the Monday. That's what it is. The 28th is a Monday, and then 29th, 30th on a turnaround week in here. There you go. It says right there Monday. So slam down here, blood the hell out of that weekend. This would be your Black Sunday or something like that, right? Black Monday. There it is. Monday, April 28th. Book it. We'll see if we can get down there and do it. What else? And this will be a telltale for us, too. It'll give us an information that we need. Are we going to head into a recession or just a crash? Do we just get down here and like we blood this right here, right? We blood this one, come back up again, right? Well, all of a sudden, we're slamming down into the 520. I think that's right around there, right around 520, 510, 520. And then we start slamming down into that bad boy over there. The target to that downside, if we can get there, is $585. $585. Big old sweeper down there. So a nice round number to the downside. So we'll stay in this same positioning. We haven't changed much here. We've been doing the same bullshit. And if we break out, if we do any of this like breakout here, we'll change our stance. If we break down over here, we know that that's expected. And the closer we get to these targets, right, they'll try to break us down out of this trend. And we'll look for we get back up in there again, bro. We're going to try it again. And then we're back down there again. So we know where the sell points are. We know where the buy points are. And let's just take a quick look here at, where are we at? Where's my indicators? What happened to my indicators here? Velocity. Check Velo really quick on a higher frame here. And velocity looks great. This looks really good here. This hourly is ready, almost ready for a rip higher. You can see the low attempts to get higher lows in the hourly. The half-hour velocity looks great. This looks great right here. You'll always like seeing an intraday trading. Always like seeing us down here somewhere. Now, the next question would be, what about this cap? Can we do this right here? Absolutely. We can do that, and I'll show you what that looks like. We get that failure, and let me just delete all this, where you get something like this, right? Get sucked up, and then wham, back down again, and then eventually we're up and out of here. Something similar to this right here, because we're so bearish. But we'll take a look at that, and I'll tell you what to look for if that does happen. There is one bad thing here, which is we're creating new daily lows on daily velocity on a 30-minute basis. That's not good. And I'm going to show you one last thing here. I think I showed this last week or earlier this week. I might have shown you this. And we are beginning to deteriorate on a weekly basis, on a monthly basis, and on a quarterly basis. We're going down here. And the scary part is that we get down to that monthly trigger, we start going down here, the month starts going down here, and this is going to get ugly, really ugly at some point. And I'll show you what ugly can look like eventually, but if we start slipping underneath here, we start slipping underneath here, there's your 2026 right here. I would expect moving up. We talked about next year being a recession year. We talked about this year being a recession year with Harris in power. We thought that Trump would push it off an extra year. I'm warning you right now. If we go into this recession trade this year, where we don't make an all-time high, maybe end of year we make an all-time high, we don't even return to the top until possibly end of year, a return to the scene of the crime. But I'm going to warn you of something right here. We start slipping underneath on monthlies and weeklies over here, or monthlies and quarterlies. We're going to have ourselves a good old-fashioned crash, just like 2000 and 2008, like a full-on panic. And you will see this market. I mean, you're going to see your favorite stocks are going to like $5. Maybe not 5, but you want to see Apple at like $10, $20. We're lining it up right now. So we can escape it, but I want you to know that 2026 would turn into a crash year instead of 2027, where they're attempting right now to speed run this. So, I wouldn't say it's all doom and gloom just yet, but it's not looking pretty right now. And I've never in my lifetime have I witnessed an intentional crash of our stock market. Never. See that big old gap down there? See it now, right? Couldn't see it earlier, but you can see it on a daily basis. Big fat fucking gap down here and needs closed. Now crashes are fine. There's a few other options here too. I want to talk to you about a few of those things too. If at any point we get a Trump put or something like that, or a Fed put, Trump put, we could still be trading that 1990s trade where we go violence down and bigger violence up. We're not there yet, though, to trade that. We don't have that price action going right now. And what else do we have in front of us? If they're going to continue to speed run this, we're likely going to see that action that I talked to you about. But you can't plan this stuff. There's no way. I want to tell you a few things here that you may or may not know. You can't plan for this. If you're the kind of guy that's like, well, I'm going to buy some puts that expire. I already looked at them like a month or two ago. They expire like a month before the target. So even if you were correct, it wouldn't print by the time you got there. They're not even releasing those options at this point. Where I think we're going if we're going down there. I'm like, there's no point here, and you can do spreads and stuff, but even then it was like a month earlier than the target. So this is something where if we're going to do this, you have to trade it. You have to trade it down along the way as we trade down. And I want to warn you of something in this. This is the important part. If we're going to do this, it gets very expensive. It's like puts would get stupid in value. So you're going to need to build a bank. If we're going to do this, you're going to, unlike calls, like you're going to need to build a bank. When I traded COVID down, I was putting out like $100,000, $200,000 a day into the market to get some like leverage and money. Like I was owning like options that were $15, $20 a piece. I kid you not. It was very expensive to trade when we started blasting down in hard and heavy. You have to have money to be in the market. At any rate, we're not there yet. Don't get crazy. And you have to take this by piecemeal. I want you to understand that. If we go into like a recession and then we go into a crash next year, if that happens, just take it day by day, week by week, quarter by quarter. Don't be like, I'm going to just sell right now, bro. I've just sold SPOOs. I'm short, and I'm going to stay short until we get down there. They will fucking blast your ass. They will blast you. You'll be here going, yeah, you know what then? Fuck you, Cap. That's what's happening, and we will run this market straight up. Some of the biggest squeezes are in bear markets, market crashes, any of those kind of scenarios. You're just fucking around going, yeah, everything is fine, man. I'll come back in 2 years, and they're going to run this right up your fucking ass. At least, I want to say 3 times a year minimum. They're going to run it right up your ass. It's not pretty. People say they're fine. They're not. You're talking about being up, $250,000, and then you're fucking at zero. Or you owe money, and you're just like, fuck, I didn't take the money. So look for those squeezes along the way. Every time we get a big squeeze, you're just like, we're going to run it up, and we're going to look for those sellers to step in. We know where the old guys are. We know exactly where they are. So every time we see these guys come out to play, we're gonna respect them, right? You saw that yesterday, right? In this stream yesterday, in after hours, we green barred it straight up. And I went right into the Discord and I said, sell those fucking calls right now. Because you can't hang out with these guys. There's nothing you and I can't. We're chasers. We chase momentum wherever price is going. If it's going up, we're chasing it. If we know that there's a guy up there that wants to wreck us and hammer us anywhere, we get out. We don't fuck around and find out. If you know people out there, right, that say, I called it, right? Like we broke out in a way yesterday, right? Let's say we broke out yesterday in a way. That guy's right once in a great while. You step off from that risk every time. Does that make sense? So if you think let me make this simpler. I can simplify this for you. If you think that, if you're like, I'm gonna make a reasonable idea that there are major sellers here, right? I'm gonna make a reasonable argument that buyers are right here, right? And let's say I am long, right? You're out, right there, every time. You're short, you're out. Right there every time. Anyone telling you, oh, I've stayed long, bro, and it broke out. The other 7 times it doesn't. 7. Those odds are not in your favor. It does not make you a winning fucking trader. You got to pay taxes. You make mistakes. There are so many reasons that can murder you over time and just flush you out of the market. You can't do those trades of the breakout or even the breakdown. The smart trader takes the trade going up into that resistance or down into that support, and they exit. They leave this part of the trade to FOMO gang, doom bears, right? Whatever you want to call them. FOMO bears, FOMO bulls. You can call them whatever you want. And let's say we do break through or break above. What the fuck do you care? You shouldn't care. That guy that's telling you that is a fucking loser. I promise you. That guy goes to work every day and he blows his account up once a month, once every 3 months, once a week, once a year. I don't know, but I know that they do it. The facts speak this. The data suggests this as well. So keep that in mind as we trade this market. And I want to continue on here with what? Let's go over here and take a peek. Go down to this. Let's go take this on a 1 minute basis here. So we know what's here. What do we know today? We know that we're on this trend, right? And until we break underneath it, you're going to find buyers here, right? They're going to step in, attempt to buy, to go higher. We've got some resistance here, and you've got some resistance here, and you've got the hourly trigger and the half an hour trigger coming down to attempt to send you lower. Now let's talk about this price action here. You've got today is Thursday, the 3rd, right? Sorry about this. I'm losing my voice here. Here's 1600, end of day. You know how they like to trap out these bears all the time, right? Let me go back over here. You know how when we squeeze balls off, think about this from a bull's perspective. If we trap shorts, right? When do we let shorts out? Typically not until close on Friday, right? Sometimes we even hold them in over the weekend, right? So this would be a pain trade. If you were long here yesterday and you're trapped, they ain't letting you out, are they? They're not going to let you out until at least Friday, maybe even Monday. So here's Friday right here. Oh, wait a minute. Hold on a second here. Let's do this on a 30-minute basis here. Can I get a Friday here? Friday, 1600. And then we've got Monday. Call it 9:30. Right there, 9:30. Maybe I need to redraw this for you guys here. So let's take a look here. This is Friday close. Shocker, right? This is no, sorry. This is do I have that right or wrong? This is Thursday. We don't need this here. We get rid of that. This is Friday, 4 a.m. So this is Friday at 4 a.m. I believe this is Friday close. Let me just check this one more time here. Hold on. I got this right here. Hold on, boys and girls. This is Thursday, 1600. This is Friday at 4 a.m. This is Friday close right here. And this is Monday, right? We'll push this over. I'm going to go right into, where's Monday, 9 a.m.? And then we're going back down again, baby. We're going to sell next week too, aren't we? More than likely. Let's get rid of that. We'll make this a one banger there. So we close the gap, right? And what are they going to do on Monday usually, right? Give you some liquidity, right? Suck us up for some liquidity and get going on another week of selling over here, right? Make sense? And we start selling into next week, and we should next week be down into this monthly trigger right here, or this monthly target down here, right? This is Tuesday, Wednesday, Thursday, Friday. Let's do it by Thursday, somewhere in there. Wednesday, 1 in the afternoon. Slap the fuck out of them down there. Makes sense, right? So we're either doing price or time to the downside. One or the other. Either we're gonna or a week. Hold on a second here. Get rid of that. We can do it like this. Just keep running down. Believe it or not, sideways and down. Attempt to close the gap, come down. But this is the target midweek next week. And then we've got the other week. Close this gap right here. Door shut up here. Ooh, baby. Ooh. Way down there. There's your 20. Break below the 20. And we are downtown, baby. Something just like that. Smash us down here, and then just pin us right in. And then wham. And that's where you get your capitulation. This is where you get your capitulation move in here. Like straight panic, straight down. And we're on it. We are on it, baby. Just like that. Look at that staircase and whoo. Just blooding it. Down and down. Fear. That's what that is. Fear. And there's no, I don't think there was some buyers this morning. There was 1.6 million at the open, but we've slowly been losing volume all day long here. All day losing volume, but we're not there just yet. So let's do it like this. Do 20. Get rid of that for now. And this is the expectation right here. Just blast through into that 20 down there. We got 30 here. Maybe it's just this one. Forget the 20 for now. Maybe we do because this is 30, so we break 30, and then we'll hit the 20 maybe over here. We got to break this. This 20 is going to be a big one. 25. It's like this. The idea here is that if you've got hundreds, 50s, 25s, that kind of stuff, if we can slice through that 25 like it's nobody's business, we can then start really like fucking buy 20, buy 10. We're likely going to 500 down here. I said 20, but like 25 is like this demarcation point. The moment, or I should talk about both, but if we blast through the 25, though, it's telling you automatically way is fucking lower. So that's like a big psychological thing up here. That 25. We'll monitor it closely. At any rate, expectations from now into Monday. Target of 556. Monday high. 5 to 6. Some kind of price action just like this. Garbage, right? You see it? Garbage. I don't know if you're getting that squeeze. I think it's going to be more like garbage, and then wham, straight up there. Like Friday close, Monday open, something like that. They're not going to let you out until the last possible fucking moment. And then we'll go down. Now, there's something you need to know here too. Something important. If we are unable to get above these 2 ones right here, we will just drop into next week. If we can't find buyers, if there's too much panic, that kind of stuff, we can head lower, but we're not there yet. We're on trend still, and we want to watch this. It's now, what time right now? 1 p.m. I mean, look at this. Just look at this. I don't know if I can show you this, but hold on a second here. Like, there is nobody in this market. There's nobody here. There ain't nobody in this market right now. Look, this looks like, I mean, it's not quite like barren, but look at all this black in here. And look at all this supply up here. Like, they just got sellers up here. This yellow line right here. I want to show you this here. See this, like, right here? It's just like pound town. Pound, right? Pound. Every time we get in here, fear. Unloading. Now, I'm going to assume here that people are calling up their brokers and they're like, get me out right now. Get me out of my 401k. We're fucked. Some doom time. So that's what I'm assuming is going on. You can see it here too. Selling here. They're just like teeing off on price right now. So I don't think we escape this until, I don't think we escape this for a bit. End of each session, overnights would be a way for it to happen. So you might see a nice little bump up in the overnight. It's possible, but you can see it right here, right? Just blasting down. Anytime, any chance they get, they're out. The whole way here. So we'll watch this closely into the end of the day. Hold on here. There's 2 o'clock. And we're going to start doing some times here. Wait a minute. There's 2. The fuck is 2:30? There's 2:30. Do I got this right? Hold on here. This is 1. I missed 1:30. And here is, so you got 1, 1:30, 2 o'clock, 2:30, 3 p.m., 3:30, and 4 p.m. So this is cash market right now. And we're going to take a peek at this. And let's start trading this if we can here. Hold on. So fucking glad I didn't get murdered yesterday in this market. Holy shit. like I'm so glad I closed calls yesterday. Like, so glad. Like, fucking what? There wasn't even like the time to get the puts too. It was like 2 minutes. It was literally like 2 minutes to buy puts yesterday. I didn't buy any. I'm not going to claim that fame. I didn't do that. I wish I had though. Hold on here. And let's check the half hour prior and see what we got going on back here. See what's happening here. These 12:30 sellers. Okay, so we got some good information here. Let's count back here. Hold on, here is 12 o'clock. See what we can divine here from the tea leaves. See what's going on here. 12 o'clock and 11:30 and right there 11 a.m. Right? Look at that shit. All right, we hit trend at 11. They buy it back up. Right? Buy it back up again. Buy it back up. We already know that there's a downtrend on an intraday basis here. Let's go look at this together. We got a downtrend here, right? It's all classical trading, isn't it? All mechanical. This all looks mechanical to me. You got the buyers or sellers stepping in on intraday downtrend, buyers stepping in. Intraday downtrend, right? Buying it back up again. Down again, right? That kind of thing. So if we get a breakout, we take a trade. We want to be watching for what? We want to be watching for a breakout to a new high, right? That looks pretty good, right? You get the 1 minute trigger here. We start to see the ramp-a-rama. We get long in here. Makes sense? Up, and away. For the downside, we are looking for this trend here, right? We got the sellers coming in. Failure right here. I want to show you this if I can. I want you to watch this price action right here. We come into this trend, right? Squeeze up. We come back down here. What do? They fail to get the new high, right? That's your auto signal to sell. You sell right here, believe it or not. You don't sell this. You're waiting for the failure of bulls to buy and break out and away, right? And away, out of there. Pretty easy stuff, right? We've been going over this stuff all week long, right? And your tools. We're in the same setup, aren't we? Look at that. We got the high. We got the down high. And what do we have here? What's showing us here? Look at this one. We got this high right here, and we got the failure. It's already shown itself. We're going down. See it? We have our first target right here, and now they're going to try to sell us to the downside, right? Let's try to sell us down again. The target is right here, right? Oh, hold on here. $2 o'clock, June, right? Woo. And one more quick second here. Not indicators. I want to show this right here. This is S3 right here. Support level 3. S5 is right here. And S4 is right here. That's that target right there. I want to show you this right here real quick if I can. Excuse me here. I'm losing my voice. It's already been a long-ass week. I was singing on the show yesterday. Okay, so we've got this S4 right here. And that's what we're targeting as S4. And we already hit S4 earlier today in cash market. So if we've already hit this S4, what are we trying to get down here? 6 o'clock right here, right? Panic at the Disco. We'll see if we can get it. Right down there. That's S5 down there. That's the plan, at least from Bears. I don't know if we can get there today, but that's their plan. You can see it. That's the juice that they want for this today. Close that gap, 534. I don't know if they can or can't, but if they do, it's going to be nasty. So we're going to look for here is a target of 539, maybe even slightly lower. We can break through over here. There's 40 right here, right? We already hit the 40. There's your target right there. 539.94 is the target. We'll see if they can blast us underneath it, which I would like to see. That would be like what? You break through here, right? Start dribbling, and it's bye-bye to the downside. Bear cross right now. And I'm gonna get rid of this line for right now just because here, let me take a quick snip here. Let me just take this for a market brief here. You guys are all weirding out about a 1 minute trigger. I kept saying we're going to go down there, man. Like, why is it not showing on the chart? We can trade all this. We can trade all this right here. The whole way up. Still on trend. Right there for you. Excuse me. I think I'm losing my voice. I might lose my voice. I think I shouldn't have been singing on the stream yesterday. All right, I'm going to turn the news squawker back on for you. What I'm going to do here is I'm going to go over some of the implications of tariff. We can't call it tariff 2.0. It's not. We should come up with our own name for it. I'll try to find a name today if I can find one. I'll go on Wall Street Bets. They probably have a good one. But we'll come up with a name for this tariff war that we're in. Operation Crash the Stock Market, maybe, or something like that. Hold on a second here. What is that? What is that there? Hold on a second here, guys. All my shit's just turning on right now. Now I've got Microsoft trying to update. Like, what the fuck are you trying to do here? Can I move that column over? Oh no, we're not doing. I want to warn you guys of something here. We are not risking stagflation. We're risking like a recession. It could be a stagflation based recession, but also a crash, or crashing, a major one next year, 2026. We're risking some fucking doom. I assure you, it's there. It's like glaring. It's just like sitting in the face. All right, what do we got here? Apple was down 8% today, down 225 billion. Whew. What is this right here? To anyone, the White House saying to anyone on Wall Street this morning, I would say trust in President Trump. No. Oh, I just lost my stream there for a minute. All right, just heads up to you. I could be losing electricity again. Did you see the flash on the show? I just lost power at my house again. This fucking week sucks. Like, can I win something? I just need to win. I'm making money this week. I'm just like, I can't win like anything else. Fucking electricity just fucking flashed at my house. Just had a power surge. They're probably switching over stuff. Okay. If I lose the stream, I'll try to get the stream back up, but just be aware, I am going through a bunch of shit where I live. It's possible that power could be on and off. We're going down, baby. We've got a half-hour trigger cross on. We got a half-hour trigger cross on SPX. It's looking nasty. Need some poots. On here. So the White House saying to anyone on Wall Street this morning, I would say trust in President Trump. This is a president who is doubling down on his proven economic formula from his first term. This is indeed a national emergency, and it's about time we have a president who actually does something about it. You know, that statement from the White House, I'm going to warn you guys. These guys want this market to fucking be annihilated. I don't know why they don't say that to you. They do. They've said it. We're going to send ourselves into it. Like Musk point blank said, we're going to create a recession. And I'm going to tell you guys, man, they are fucking serious. At this point, we see no put here from Trump. We see no put here from the Fed. And even if you got a Fed put, I don't think it matters. I don't think the Fed should. And I'm going to tell you some other stuff if you want to know, but I don't think they should cut rates through this whole process. Like they only have so much gunpowder. They what do they got? A couple rate cuts that they can do? Not too much here. QE. Some of you guys out there, I've heard you guys say printer go burr. That's not always the case either. And if they don't make the printer go burr, and you also got what's his face? Trump or not Trump? Powell is a lame duck. This guy is out in mid 2026. So you're going to get a Trump appointee. Markets just in full crash mode in 2026, and he can install whoever he wants and say, look, I blame Jerome Powell, and I'm going to fix it with my guy or whatever as they front run this crash. It's economic, and it's not really a market crash, like an economic crash, I should say, around the world. Okay, so we've got White House statement this morning. We also have Lutnick saying no chance Trump will back off tariffs. That was an hour ago. Nike is going down. I was interested in Nike, but I'm not interested in Nike right now. Justin, Canada will impose 25% tariffs on all vehicles imported from the United States that are not compliant with the USMCA trade deal. French President Macron saying European companies stop their investment in the U.S. Canada says it agreed to strengthen the diverse trade relationship between Canada and Germany in response to Trump tariffs. You're going to expect, I don't know if you understand this, but you're going to expect like Mexico, Canada, Australia, all these other countries, Japan, China will be wrapped up in that whole trade agreement. And the U.S. will be isolationist outside of those trade deals. What else do we have here? Robinhood down 40% today. Woo. In the last 3 months, it's down 60%. Yesterday, the CEO saw the stock price in after hours and said literally, "Oh shit." What else do we have here? That's a kind of a funny note. I like that. We're heading downtown, baby. Come on down, baby. What else do we have here? Give me one quick second here to go through this stuff with you. I've been out of pocket too. I barely had any internet this morning. Hang tight right here. I should have said this to you earlier too. Yesterday we talked about trading a range of 5,500 to 5,800, and to look at 5,500 as a place to buy the dip. Slipping the S&P 500 slipping under 5,500 this morning, and here's that green bar down here. Let me show you this really quick. We're slipping under this 5,500 right now. This is becoming not supportive, but a source of rejection. What else do we have here? Treasury Secretary Bessent warned trading partners not to retaliate, said as long as you don't retaliate, this is the high end of the number. We've seen retaliation already today. And it's suggesting that the trade war could further escalate. U.S. yields declined after the presser, but the overall drop is limited. Minus 3.4 BPS at 3.84. I haven't checked the 10-year yet. Mega cap tech stocks are getting sold off hard after the close. Between 5,400 and 5,600, gamma is very concentrated, which will lead to huge dealer flows in the days ahead. And it is safe to say that things will be interesting and volatile. If you insist to be optimistic, one could make the argument that, yes, there will be volatility, but things will only get better from here now that we know the tariff ceiling. Mexico and Canada can easily reduce the pain by stopping drugs and illegal immigration, while Europe, I don't think Canada does that. The only drugs passing borders is from the U.S. into Canada. But okay, that's the grift that we're running right now. Mexico, Canada, and China can easily reduce the pain by stopping drugs and illegal immigration from Europe, and particularly Germany is too weak to escalate. According to Goldman's latest prime report for March, hedge funds and other asset managers have already taken a lot of risk off the table. For example, North America saw the largest net selling since January of 2022, second largest in 5 years, driven by short sales outpacing long buys by roughly 3-1. The region's weighting is currently near 5-year lows. Europe saw the largest notional net selling in more than 5 years, and flows point to risk unwinds in the region, driven almost entirely by long sales. I want you to consider this, what they're saying about Europe, too. This is my warning to you. There will be no safe space for your money in Europe. There will be no safe space for your money in Asia. If the U.S. is able to send us into a recession, remember what I said to you earlier this morning. It takes the entire world to join in on a recession. Entire world. You can't. The U.S. doesn't enter recessions alone. So you will see the world will need to take part in this recession. So just take note of that if you think that, hey, I'm going to go trade this market or go trade that market, any of that sort of stuff. This is now a source of rejection for more downside here. I'm going to get rid of this line right here because we know where we're going, and I don't want it to interfere with price targets and that kind of stuff. What else here? Asia saw the second largest notional net selling since October 24, second largest in past 5 years, as DM and EM stocks were both heavily net sold in March, driven by long and short sales. So while the bottom is still to be found, we are maybe much nearer to the end of the tunnel than a couple weeks ago. So for all this bearishness, right, all this doom and gloom, we are expecting some kind of a squeeze higher at some point. And I want you to pay attention. I want to go back to that topic. I'm going to read this to you one more time. So while the bottom is still to be found, we are very much nearer to the end of the tunnel than a few weeks ago. And let's go to the trigger screen once more on a higher frame here. And I want to show you this, just like breathe for a minute if you're a bull, I guess. Whether regardless if we get out of this now or even down here, it's still close. Like horseshoes and hand grenades, you're pretty fucking close. Even if we hit this target down here, this is like a zone of, hey, we're going up. Does that make sense? We're up and out of here. There's no expectation. We're not in a recession yet. We can slip into a recession, but we're not in one yet. You have to understand that. They want a recession. You got to trade each part and each leg of a recession. So we are we're still in the zone here, right? We're still in the zone. And not only that, I want to also draw your attention to just last week. This is the 13th of March here, right? And we're still here. You see that? Like, we're here. We haven't done much shit here. For all the doom and gloom, like, oh God, it was the worst thing ever. There's still buyers down here. They're buying. They're going to buy down here and for a trip higher. So don't get too crazy with the doom and gloom. I'll read that to you one more time, that last little bit. So while the bottom is still to be found, we are much, much nearer to the end of the tunnel than a couple of weeks ago. We're pretty fucking close, man. We're getting out of here. So keep your chins up out there if you're a bull. We're good, definitely, all right, even if we don't test this, we're going to test it. I'm telling you, we're going down there. Even if it's not now, we go down here. Let's say we trade this down here, and then we're up and out of here, right? I'm telling you, we're coming back for that. Well, we're coming back for that if we stay in the stance that we're in. I'll say it that way. We will be back to revisit this. Even if we don't hit it today, we're coming back for it. Unless something fundamentally changes. That stiff shit's still on the docket here. Okay, what else do we got here? Almost there. We're getting there. Got to catch up from this morning. Go back over here. Sorry about that. Party time, baby. Keep on going down. Right there. Next thing. BTIG's Krinsky. Markets typically bottom on bad news, not good news. When they can't go down anymore on bad news, you know that everything is priced in. Another good positive note. I'll read that to you again. This is Krinsky saying markets typically bottom on bad news, not good news. This is like the good news FOMO traders, right? You're always looking for all of that doom to be rolled out, right? The worst doom is behind us. The big fat tail is behind us. Recall the October 22nd awful inflation print marked the bottom of the bear market. This afternoon's tariff announcement, at least initially, so I make sure I'm on the right date here. This afternoon's tariff announcement, at least initially, appears to be about a worst-case scenario, with the S&P 500 futures down over 4% at one point. The question is, what is the reaction to the reaction? We think this should finally trigger some real capitulation signals, which would suggest the end of this move tactically, rather than the start of a fresh leg lower. So earlier when I showed you those staircases down, right, when I was like, yeah, we can start staircasing straight down to the end of the month of April, right? What is that? Capitulation, isn't it? You've got bulls saying, fuck this, I'm out, I ain't buying shit. Get me out of this market. I'm going to go do something else. This guy's on the stream telling me we're going into a recession and they're going to start crashing the market next year. Pack my bags. I'm out. Robinhood. What did they say yesterday in their earnings? They said, we're losing users. Did you hear that? Robinhood is losing users. That means that people are packing their fucking bags. When we go through these cycles, right? I've been doing this show now between bear markets and bull markets. I watch. You'll be shocked. The viewership just fluctuates right along with these bull and bear markets, and bulls get flushed out. They're gone. They go away. They do something else. They come back, and then all of a sudden the viewership goes cranking again, and they're the loudest people in the room. They're usually the loudest traders, right? Bro, we're going up forever and ever and ever and ever. And, then they get flushed out as they get bummed out, right? They're like, well, if this market's not going to make all-time highs every other week, what am I doing? Or I'm going to blow up my account the entire way, right? So, and then you see the same thing happening with bears, right? Slip into a bull market. Same thing happens with bears. They get flushed out. They go hide in the corner and they yell at the world for a few years. I'm too scared to go long here. I got left behind. Can't I just get a pullback? Then you get the pullback, and they're like, I want to crash. You're like, wait a minute, I thought you wanted a pullback. And then it goes up again, and then they're like, I didn't get in on that one either. I was too afraid of a crash. And, you know what I mean? So the same cycle kind of a thing here. So recall around October of 2022. This was, if you remember this, I did a show that morning. So this Krinsky's guy's talking, and it was 4 a.m., 4 o'clock in the morning. On October 12th, I believe. And I did a show that early in the morning because the stock market was at bottom. And I was pounding on my desk, screaming, because all I could see in the news was sell everything. The worst market crash is coming. And we're going to lose the entire market. It's going to be Black Monday. We're going down 20. We're going to hit breakers all the way down. Market is over. That was a time when we were near bottom, and some of I believe the quarterly trigger was at like 3,200 or something. And Mike Wilson came out, and like Jamie Dimon was like, we got another 200 points. We're gonna liquidate this fucker and go down there. And that was the bottom that morning. So they trapped in a bunch of bears. They fucking trapped every fucking bear. And every fucking bear came on my show and said, don't worry, we'll be back here. We'll be back here next month, next 3 months. Fuck you. They were swearing at me. And we left them behind. Gone. Never came back. And that's what this guy Krinsky is talking about right now. And all of the news was just like what I'm reading and telling you right now. We're going to go into a recession. We're going to have a crash. We're going to move the recession up to 2025. We're going to move the crash up to 2026. There's no reason to be in the stock market right now. You're fucked. I'm not interested in Nike. All this talk, right? This like doom, gloom. You can see it right in the market right here. There's nobody in the market. It's a ghost town. You can see it right here. There ain't nobody in this market today. So recall October 22nd, awful inflation print marked the bottom of the bear market. This afternoon's tariff announcement, at least initially, appears to be about a worst-case scenario, with S&P futures down last night over 4% at one point. The question is the reaction to the reaction? What is the reaction to the reaction? Now, this is the important part. We think this should finally trigger some real capitulation signals, which would suggest the end of the move tactically, rather than the start of the fresh leg lower. To be clear, we don't think we're done with the correction broadly and continue to view rallies within the context of a larger decline. For now, however, tonight and tomorrow could very well be a near point inflection. Hold on here. I'm about to get stopped out of this trade. Hold on. I don't like seeing that there. Oh, motherfucker, this is a trap here. Just a little bit more down. Motherfucking bear trap in here. Okay. So to be clear, we don't think that we're done with the correction broadly and continue to view rallies within the context of a larger decline. For now, however, tonight and tomorrow could very well be a near-term inflection. So an inflection point into the stock market. Needham's Nisic. No, we're not talking about that. That's Under Armour. Fuck Under Armour. What else do we have here? Apple, I want to read this one to you. Apple analyst Ming-Chi Kuo, I apologize if I mispronounced that, with 85 to 90% of Apple's hardware assembly based in China and the rest in India and Vietnam, the Trump administration's new tariff policies imposing 54%, 26%, and 46% respectively will significantly raise costs for hardware exports to the U.S. If Apple keeps prices unchanged, its overall gross margin could significantly drop by an estimated 8.5 to 9%. Woo! HSBC downgrades NVIDIA to hold from buy with a target of $120. Fitch downgrades China to A, outlook stable. Commerce Secretary Howard Lutnick, in a CNBC interview today, all previous trade policies were designed to make certain people rich at the expense of factory workers. President Trump is going to change this. Tariffs are about the reordering of the free trade system. Non-tariff trade barriers were taken into account in tariff rates. No, they weren't. That's a fucking lie. Okay. Looking to increase domestic price. Some of this stuff that I'm reading, I'm like, yeah, that's true. That's not true. That's true. That's not true. Hold on here. Hold on a second. USMCA is still in place. Energy prices are not being touched. Car parts under USMCA are not being touched. That's good to know. So your car parts aren't going to go through the roof. Electronics used to be built in the U.S. Now they are built in Asia. Talking with all the major countries of the world, he expects most countries to start scrutinizing their trade policies with the U.S. He doesn't think the word exemption is going to be a factor. It is silly for countries to retaliate. Interest rates will go down. Lutnick also goes on to say, no, that's it. That's just a repeat. Hold on here. Macron, the response to Wednesday's announcement of U.S. tariffs will be more massive than the previous response. GS saying tariff announcements came in worse than expected. GS had raised their assumptions twice in the past month to 15 pp effective hike. It seems we are a tad worse off at somewhere closer to 20 ppt. Beneath the hood, Asia takes the brunt, and in particular, EM Asia. Overnight, our pads saw long selling of tech names and aggressive hedge fund shorting in macro products. In Asia, we are better sellers across the board, but don't sense panic selling at the moment. That's good to see. There will be, though, not today, but there will be panic selling. A lot of moving parts, clearly. Will Trump allow any form of rates renegotiation? How will other countries respond to the form of tit-for-tat actions and or domestic policy support? In the medium term, what does it mean for global supply chain and trade lines? In longer term, how would this shift global regional alliances with or without the U.S.? GS goes on to say, good roadmap as valuation gets readjusted. Think about that. Good roadmap as revaluation gets readjusted. This could be a process that takes, if we stay on this track, this could be a process that takes years. It could be 2 years, even I would say 2 to 4 years, depending upon if Trump still is in power and if Trump is able to win the midterms and gets his mandate, which is what you're looking for. Does Trump get the mandate in the midterm elections? If he does, you're talking 4 years of do what I told you to do, and then more than likely that is a mandate beyond his presidency. You would likely see more, right? You'd likely see someone win, believe it or not. That's a Republican or even MAGA to continue this policy on farther down the road. The good roadmap as valuation gets readjusted, S&P return scenario, higher tariffs and greater uncertainty drive slower growth and lower earnings. So think about that. I want to read this to you again, right? It drives slower growth and lower earnings. That means you have to readjust price, right? The dollar is more valuable. You have to readjust what a company is worth in actual dollars. And you can have good years, but you're not going to get the returns that you once had, right? If you're making your parts now in the U.S., we have labor laws, don't we? Right? Well, we say we do, but it's more expensive to produce product here. And also, you've got what else going on with that, right? You've got I need to be able to afford an iPhone, or my disposable money is now being spent on an iPhone. You also have people that will say, you know what, maybe I'll just use my iPhone until this regime gets a mandate, right? Maybe I'll put off purchasing new stuff, right? So you've got two actions going on, don't you? You've got the one action of repricing, valuation, and earnings returns, and then you have the second action, which is the impact on the consumer, right? Consumer is going to say what? What would you say? If most of the products that you want to buy and spend money on, you might go a little bit longer now, right? You know what? I'm going to hold that iPhone and I'm going to run this thing down until they update me out of it. Maybe I'm going to consider a different kind of phone, something less expensive, right? Maybe not an Apple anymore. Maybe I'm going to an Android. Maybe I'm going to the free one they give me. You know, the $100, $200 phone, or the $1,000. Maybe I don't want to say this, but you're like local cell phone companies. You know, cheap $100, $200 phone. Now it's like $500. So those days might be gone too. So, anyways, this is all about Apple here, or not about Apple, but readjusting earnings. Each 100 BP change in U.S. GDP growth is worth about 3 to 4% of the S&P 500 EPS growth, and each 5 pp increase in the average tariff rate reduces our EPS forecast by 1 to 2%. Isolating just for the tariff impact, given GS base case was at 15 BPS, tariff increase versus 18 point and 19 implied from yesterday's announcements. This brings 2025 EPS of 253 to 250 to 248 range, resulting in the S&P 500 down 5,000 in most non-recessionary scenarios. So we got that last little 5 BP, right? So what does that mean? That kind of puts on the board, doesn't it? Do we go down there and trade down here into this? We price in that last 5 PP down here, right? Trading that 520, that 500 down there, that would put us in line. And you can see this morning Apple being taken to the woodshed over being priced into these changes with tariffs and possibly even the consumer. Jefferies analyst Lee coming out and saying we like the Apple supply chain more than Apple. Our base case remains Apple will be exempted from China tariffs. But in the worst case, if 37 million of iPhones made in China to be imported in the U.S. will be subject to a 54% fucking tariff. Woo! Hello! Woohoo! We got to watch wage growth now, don't we? See if people are getting paid more money. God damn. Talk about a status symbol. And 2, Apple will absorb 100% of that tariff impact. So the sales vol is not impacted negatively. So the big question here becomes what? Do they raise the price of Apple iPhones, or do they, like the hot dogs at Costco, eat it? That's what needs to be found out, right? If we get these tariffs in play and you start to see either pricing going up or Apple eating that hit to its bottom line. It is possible. It is possible for Apple to raise price and pass on some tariff burden to high-end consumers. I fucking love it. Hold on a second here. We got rich people out there that'll pick up the burden. It is possible for Apple to raise price and pass on some tariff burden to high-end consumers without affecting volume too much. If you thought Apple iPhone was a status symbol before, I got news for you. Sorry, I can't stop laughing at reading this. Like the fucking hopium man is crazy. And pass on some tariff burden to high-end consumers without affecting volume too much. Upside to our forecast. But that may be offset by the fact that some non-iPhone products would also create additional impact on Apple's earnings. Now, on the flip side, we believe even if Apple is exempted from the current tariffs, there's a lot of goddamn hopium here, it will need to accelerate its supply chain diversification efforts and thus needs to pay its suppliers better and give more share to those who could help Apple achieve this objective. That's why we like selected Apple supply chain players better than Apple. Ooh, I like that. So rather than trading stonks like Apple, start looking at the suppliers to Apple as the real breadwinners here. In particular, we think LY, that is Lima Yankee, iTech, LY, iTech capacity in India, and Luxshare capacity in Vietnam fall into this category. If you have access to world markets, take a look at both of those companies. Next up, we've got the 10-year dropping to new lows following a weak ISM services index, 50.8 versus 53.2 expected, and are now trading 11 BPS lower. The key aspect of the report, besides the obvious weakness, was the employment component, which was contracting for the first time since September. Canada, I told you earlier, announced they will put 25% retaliatory tariffs on U.S.-made vehicles. WTO Director General Okonjo Iweala says that estimates suggest that the tariff measures, coupled with those introduced since the beginning of the year, could lead to an overall contraction of around 1% in global merchandise trade volumes this year. When I told you earlier that you need the rest of the world to join in a recession, that is what this gentleman is speaking about from the WTO. JPM, the estimated effective rate is approximately 24%, higher than 20% worse scenario suggested. The key question from here are whether we have seen the worst tariff scenario already. We know that that's not the case, right? We see countries this morning and this afternoon announcing retaliatory measures, and Besant also saying that they would not retaliate unless other countries retaliated. So we'll see if they hold to their word or if you start to see announcements from the White House or the Treasury or the Commerce Department of more retaliation. This is where volatility comes in, right? Trump comes out one day and just starts saying, fuck it, we're going to hit France again, we're going to hit Canada again, and this war begins to escalate. We have seen a number of countries, so hold on here. I'll read this one more time. It's from JPM. The estimated effective rate is approximately 24% higher than the 20% worst case scenario. The key question from here is, number one, whether we have seen the worst tariff scenario already. Number two, what is the likely economic damage? And number three, what are the equity market's implications? Is this the worst levels on tariffs? Answer, unlikely. We have seen, one, a number of countries already starting to plan retaliatory tariffs ahead of yesterday's announcement. Two, the details of the White House statement also suggest that Trump has the authority to further increase tariffs to counter retaliation. Also, both indicate the potential escalation of a trade war. That said, one positive development could be a trade deal between the EU and the U.S. Another note here, too. Yesterday, I believe it was late last night, the Senate had a vote about tariffs, and it was a bullshit vote. Basically, I want you to know something here. Your senators and your House of Reps are on board for this trade war. I want you to realize that as of right now, there is not only no put from the Fed, no put from Trump, you also have no put from your senators nor your representatives in this country. So be aware of that, too. That vote last night was symbolic and only meant as a political tool for campaigning. Yes, I was against this tariff trade war. So they can say that, but it is effectively zilch. So I want you to be aware of that as well. You've got no put from anyone, no one here to save you in this tariff war as a citizen in this country. Another consideration is congressional action. U.S. Senate passes a bill aimed at stopping Trump tariffs on Canada. I'll go more into this later. This is a bullshit thing. As of right now, that is not true. Okay. From an escalatory perspective, we could see further announcement on sectoral tariffs such as shipping, chips, and drugs. Did you guys notice this morning that UNH was up this morning? It was green this morning. Did you guys see that? I was fascinated by that. Remember when everybody hated UNH? UNH is partying, or I don't know what their price is right now, but this morning it looked fucking great this morning. So interesting, right? You think you have an argument against the company, and all of a sudden that company is green while others are getting murdered in the market, right? From an escalatory perspective, we could see further announcement on sectoral tariffs such as shipping, chips, and drugs. The U.S. market intel views semiconductors and shipping as part of the worst-case scenario, which could trigger retaliation that includes the ROW targeting U.S. services where the U.S. has a surplus against virtually all countries in things such as financial services, consulting, and legal services. And I got something cool here for you. I got some good news for you. Hold on here. Hold on here. JPM's March recap. You ready for this? Guess who the bag holder is? I'll post this in the Discord here. Come on, man, dude. Sell this fucker down. Oh, hold on here. I labeled this post smartest guys in the room. And it shows that the largest buyers, or JPM's March recap, retail saw the strongest month of buying over data since 2017, buying dips in both single stocks and ETFs. Hang tight 1 second here. Hold on, I gotta do something here. The last later. Are we going to war with Iran today, knocking out some stuff? I haven't even listened to this. Let me see what this thing sounds like. Hold on. The downside target in SPX. I've got, let me just check something really quick here. I'm just fucking around. Hold on here. Hold on, guys. Hang tight 1 second here. SPX, downside target. 54.45, right? Is that we're trading right now? 450 is where we're at. Target downside, 5,400. Yeah, we're already on. We're there. We got a target 5,400. We're not going that far, man. Hey, doggone it. Are you watching the stream? All right, cool. All right, ready? I will show you what I'm looking at here. Some points of interest here. There's a major gamma bar at 5,500. You see that there? And there's one more major gamma bar here at 5,400. Currently, the S&P 500 is bouncing around in here. Just like that, and just like that, right? Just like wing, 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 right? 54, 5,500, bouncing around in here. This seems pretty, not supportive, but price wants to stay away from this 5,400 is the point that I'm trying to make to you. Like, dealers don't want to print this if they can. Or murder those puts as much as they possibly can before hitting it. The other thing I want to show you here, brother, is 2-date gamma. And we have a target here of 5,450. This is like a magnet, okay, on a 2-day basis. And let me show you where we're trading right now, okay? So 5,450 is a magnet on a 2-day basis. And what are we trading right now? We're trading that 5,450, aren't we? We're kind of like roped in right here. So 5,450. This is a magnet for today right here, but there's one other thing I want to show you here, which is 5,400, which is right here. This is the actual gamma on the market right now that have not expired. And so what I want to show you here is we're kind of like tied in right here. They don't want to print this down below until it's worthless. So you could see a sweep down, print those bad boys into Friday, and then we're up and away down there. So you can just watch it right there. And we're being pinned in right now, like kind of like hemmed in to not print that big old gamma bar down there at 5,400. Now there is a gap down below at 53.80. It's possible we could see as we flush, sweep, and then up and away to the upside. But if you're looking at this with, excuse me, with SPY, just so you can see right here. This is what they're attempting to do, right? Park us in here. This is 5,400 is right here. Or excuse me, sorry about that. This is 5,450, I believe, right here. Sorry about that. Looks fucked up too. My drawing is not good. 50 right here. This is 5,400, I believe. Make sure I got this right. I believe this is 5,400 right around here. And then we've got the sweep of the gap below down below. So I've got so far the only target that I have is this downside target here on an intraday basis, but we do have this like trend here. We tend to abide by it. So I would think that we hold this, but we could sweep lower. So targets on SPX would be 5,400 on SPX. Does that work? On there. Sorry about this. I'm gonna chat right now in the Discord. Mm. Exactly. Exactly. 100%. I'm with you, Doug, on it. They're like, like even though we're heading down right now, so we're having a conversation in the Discord right now about this down move is like scraping pennies, and there's a squeeze looming here. It's not the best place to be short. It's dangerous to be short here, is my point. We can start. We got like the idea here is that you're likely going to get us. Let's do a base case here. At any point in the next 1 to 3 sessions, you're likely going to see a squeeze. Either like late part of the day would be a prime example, or in an overnight would be a prime example. Like the move's already been made is the point, right? The move's been made already yesterday into today. You could see a little bit more downside here, but I think the danger is more to the upside. I would prefer to short from the top of the gap. So up here is for me, I think the safer trade is like all these red bars up here is what I like. You can see it right here. I'll just show it to you here. Like, I think we can get more downside here, but I'd like to see us get down there and then close the gap. But, we start fucking doing this bullshit sideways, and you're just like buying puts, and they just whipsaw you up. So, my preference here is to be a seller from somewhere right here, 552, 552 and a half, probably 552.50, somewhere in here. Do this kind of shit is what I like. Just like hammer them right here, somewhere in here. It's possible they could close most of the gap. It's possible they could close almost all of it. I don't think we get back to this monthly. We're done with this one. We're in like an attraction mode right here. I'd like to see somewhere up here. Like chasing pennies down here, I think is kind of fucking dangerous. We're trying to trade this when this is the monster trade and that's the monster trade. There's like a juicy trade in there. There's a juicy trade in there. So I think it's better to be either sitting on your hands or long or looking to get long on a low rather than short. So the thesis here would be if you can catch a low here, or here even, that's what you're doing to get long. Not necessarily short. It's dangerous to be short here. We're like one, bullshit presser away from, we've solved all our problems. We've gone. And this becomes a wick, right? Wick candle. And we're out of here. Anyways, that's just my own preference. If I was a bear, I would be sitting right here. Personally. Right about there. Any fucking around up here, sudden fucking pack into the downside. And these are where your bears are. These are your... Where's the old man, guys? Thought I had this up here. Yeah. Just to show you where everybody is. These are your old gym bros here. Okay. And your young gym bros are likely, even if we go down, the young gym bros are likely here. You could say they're right here, but this is where a wise trader would sit. Up slightly. Because these fucking these fucking bulls want this closed. So you're just waiting here for them, and you're probably slightly lower. So these fucking bulls are like, "Hey, we're going up, bro. We're gonna close the gap. Oh yeah, everything's awesome." And they think we're gonna close like all this up here, and you just like hammer them right here. a little bit lower than the 4-hour candle. It's probably somewhere like right here, right on that. See that line right here? Probably like right fucking here. And I'd be fucking hammering you. So your initial would be like wham down, try again, wham down, and then boom to the downside. Fuck them right in here. That's me though. I can see the idea of wanting like, yeah, bro, you missed all that right there. But still, the better trade is right there. Unless you're already short. If you were short from up here, maybe if you're short from right here, I could understand and being short here, but or just be tactful about it. You can see that they sold right here too, right? These young gym bros, they're right here. And they're selling us down. They want this here. I don't know if they'll get it or not, but so far this whole trend has been holding here. Here. Does it become something fucking stupid where we're like grinding? Brother Fresh Air, grinding, right? On a Friday, grinding. On Monday, and then we squeeze up. I don't know. I don't know what the answer to that is. It seems dangerous here for a squeeze. Here's the last one. Right? Fucking bam. And there's where the real sell was up here. So unless we break this, I guess. But we haven't broken it yet, so. For now, I would say targeting this right here, right? I would say stay short into that bar right there and close them, regardless if we break through or not. Only FOMO is down here. That's why I got this here. I got this arrow stopping right there. Stops right there too, whatever. Doesn't matter. Price or time. If you wanted to get short lower than right here, you'd need to see the move below. And then you'd want to take the second short only right here. You get the low, and then if you start to see price creep below it, you hammer the sell button, and then we can take that short right there. But don't get fucking in here. Don't dick around in there. Even if it happens, don't dick around. It's just as likely to bounce and ricochet here. As a matter of fact, something like that right there. And that squeeze could be massive. Yeah, somewhere in there. Maybe even higher. You can see that squeeze right there is pretty fucking big too. Really fucking hit. You see it right there? Just be really careful of that. See it there? Hang tight here. I gotta close something. Watch this closely here. Spoo's not coming back to retest the lows, the intraday low here at 54.20. that. I'll put that up for you here. I'll put it on a 1 minute here. Ah, shit. Hold on a second here. Where's the what is that at? Why does it always just there it goes? Shit is like all over the place. Maybe this visualize it better. I'm pissed about this. I put this in the Discord. That seems simplified, I think. Did I do the right person there? SPX or SPY trying to turn up right now? All right. I have to finish what I got here, and then I'll go back to the Discord. Hold on a second here. I got to catch up because I wasn't here early this morning. No internet on here. See if there's anything here. Goldman Sachs asset manager executive says tariffs are a growth shock that are contractionary. Goldman Sachs asset manager exec says potential of stagflation is real after U.S. tariff announcements. White House is floating the idea of potentially launching a tariff investigation into critical minerals imports. Pentagon watchdog opens probe of Hegseth's use of the Signal app. You know, I was talking to a friend last night about that Signal stuff. People get sloppy, man. Like, we got this, bro. The worst thing you could have possibly done was get on Signal. And then they get on Gmail too. It's like you're gonna be doing this shit, you got to be real careful, because the long knives are out behind the scenes. If you're half stepping anywhere, like that deep state, blue state, they don't fucking care. They will find a way to fuck you sideways if they can. That's just slop. It's like not the right time to be doing that. That's so an investigation into Signal and Hegseth. I don't know how that has to do with the market, but that was on Walter Bloomberg. read a few more things here too for you. Hold on a second here. I got some cool stuff here for you. Import tariffs could add $6,400 to the cost to build new U.S. homes. I bet they charge you more than that. The John Lavallo estimates that the U.S. tariff announcement on Wednesday could increase the cost to build an average house by $6,400. Woohoo! That means my house is worth more. I will bring this up. Fucking Zoom, really? That's the only way to watch this thing is via Zoom? Are you kidding me? Dude, I don't want to check one too. I don't want my microphone on. Click on the audio button to mute your mic. Fuck no. Okay. Oh, that's muted now. I don't want to talk. Join. Joe Folsom, Fox News. How am I in here? Dude, nice. I'm in here with like a guy from Fox News. Check this shit out. I don't know how I got this link. Look at this shit. I'm in here with what's up Joe Folsom? Can you hear me right now or no? Like Fox News guy. I'm in here with a Fox News guy hanging out. Hey, what's up, buddy? Can I text this guy? Is there a chat? Don't the fuck out of here. Let's see this. Oh, there is a chat. Who can see my messages? Should I type? Should I get kicked out of this fucking thing? Should I go stock market show, bro? Should I type no, I shouldn't, should I? All right, we'll keep this over here. I'll keep this on the side. Right now, Trump market is going to boom. Yeah, it's going to boom, brother. It's going to boom. Be careful being short here. I have to warn you, Trump is trying to pump the market right now. Just a heads up. I've got this Zoom workspace thing up and running over here in the background. I'll see if I can pull Trump's speech up as well in the background for you right now. See if we can get some live Trump live. He fucking loves this, doesn't he? He's so hold on a second here. Trump live. I don't see any Trump live right now. Bro, the market doesn't trade to Trump and fucking pulls the handle on tariffs. The market fucking caves. I don't see any Trump speaking right now. This is MSNBC. Nope, I don't see any Trump live right now. This next guy is coming up now. Hold on. All right, I've got this other thing going on here, but I don't hear anything yet. Who else is in here? Bloomberg News is in this room with me. What up, Bloomberg News? What's up? What's up? What are you guys doing? Big Balls is in here. What's up, Big Balls? I know you. Big Balls is in the room. A whole bunch of people in here. There's only 56 people in this Zoom room with me. That's it. All reporters. Ooh. That was written comments from the Fed's cook.
Recording in progress.
Check. I got my audio is muted in this room because I don't want to be fucking around with these people. There's like a bunch of reporters in this thing.
Good afternoon, everyone. My name is Luca Rigotti. I am the chair of the economics department, and it is my pleasure to welcome everyone to the 2025 McKay Lecture. The McKay Lecture series is named after Professor Marion McKay, past chair of the department. And this lecture is distinct in that is...
No, we might turn this off. This is Cook from the Fed is going to be speaking at this announcement, but they did provide Cook provided a written copy of the speech. So unless he breaks away from his written comments or in a Q&A, maybe there might be some information that we need. Let me turn this shit off.
For all the insights that economists...
you could get maybe some varying away, and Q&A could give you some more information, but he may stick to the script here.
Different important topics in the field of economics.
Watch out for a squeeze. I meant to tell you that. Sorry. Watch out for a squeeze. We tagged to the tick.
And artificial intelligence in labor markets and job...
Squeezing now.
Repugnant markets, the fight against poverty, rethinking the wealth of nations, and the role of private sector data to inform responses to social challenges, among many others. This year, we could have hardly asked for a more topical...
This is bearish, by the way.
Lecture.
Looking for liquidity and stops to go lower.
Pass the microphone to Professor Marla Ripple, also from the economics department, who will be introducing our speaker today.
Good afternoon. It is my great honor to...
We hit the target already, doggone it. We had the target right here, bro, to the tick.
Has served...
You can see the arrow.
Board of Governors
right there.
Of the Federal Reserve System of the United States.
As soon as we hit it, boom. Next minute was squeeze time. This is taking stops right now.
Governor Cook's academic journey is both impressive and groundbreaking. She earned a BA in philosophy from Spelman College, and as Spelman's first Marshall Scholar, she later obtained another BA in philosophy, politics, and economics from Oxford University. She went on to complete a PhD in economics from UC Berkeley specializing in macroeconomics and international economics. What sets Governor Cook apart is her remarkable blend of academic excellence and policy leadership. She has served on the faculty at Harvard's Kennedy School of Government, where she was Deputy Director of Africa Research at the Center for International Development. She was also a National Fellow at Stanford's Hoover Institution and a Professor of Economics and International Relations at Michigan State University. Her contributions to public service are equally distinguished. Before her appointment as governor, she served as Senior Advisor of Finance and Development at the Department of Treasury's Office of International Affairs and as a Senior Economist on the Council of Economic Advisors under the Obama administration. Governor Cook's research spans several areas, including economic history, innovation, entrepreneurship.
There's people dicking around in this Zoom call right now.
Her influential work has shed light on how improved early stage assessment of inventions and innovations can broaden the range of new entrants, fostering business dynamism and driving productivity growth. Governor Cook, we are truly honored to welcome you to Pitt. Thank you for accepting our invitation. We eagerly look forward to your remarks.
Like a bunch of degenerate traders and a bunch of reporters in this Zoom meeting. There's like 56 people in here, and it's like a mix of like straight edge reporters and then some degenerate traders making comments in the chat. Hold on here. Oh, they kicked us all out. I think they kicked us out here. I'm not sure yet. They might have kicked us out of the Zoom. Nope, they didn't kick us out. Oh, this is too hilarious. We got like Fox Business reporters, MSNBC, CNBC in there, and then you get like degenerates prop trading.
It is wonderful to be here at the University of Pittsburgh. I am honored to deliver the 2025 McKay Lecture.
Oh my God.
Marion McKay, who led
Big Balls is in there. He's in our stream. Big Balls is here, is in that chat.
many significant contributors to the field of economics.
What's going on, Big Balls? Good to see you, man.
David Ott, Lucas, and Joe Stigler.
You guys want a link to this? Let me get you guys a link to this. Hold on.
This lecture for many months because researching, discussing.
Oh, definitely. I'm gonna get it right now. Hold on, brother.
Been my favorite.
I'm gonna get the registration link right here.
Been a professor for much longer than I have been a member of the Federal Reserve's Board of Governors, which I joined 3 years ago.
I'm gonna post this for you inside of the Discord.
He and I overlapped at
If you want to join this chat, it's like a bunch of fucking degenerates. It's from the link is from Financial Juice, but there's like a bunch of degens inside this chat, and like a whole fuck ton of real legit reporters.
Also offer some recent historical
There's a link in there if you want to.
how the economy arrived.
Yeah, Big Balls is in there.
Some economic concepts, and finally, discuss my approach to monetary policy at a time of increasing uncertainty. Over the past few years, the U.S. economy has grown at a strong pace, supported by resilient consumer spending. Currently, I see the economy as being in a solid position, though American households
You fucking goat.
reporting heightened levels of uncertainty about both the direction of government policy and the economy. For instance, the Beige Book, a Fed report that compiles...
He's in there shit-talking right now at all these reporters. And then, like, it pops up on your screen even if you have it closed.
45 mentions of uncertainty. That is the largest number of mentions of that word in the history of the Beige Book, which has been around for decades, up from 12 mentions a year ago. Consistent with elevated uncertainty, there are increasing signs that consumer spending and business investment are slowing. Inflation has come down considerably from its peak in 2022, but remains somewhat above the Federal Reserve's 2% target. The labor market appears to have stabilized, and there is a rough balance between available workers and the demand for labor. The unemployment rate remains low by historical standards. The Federal Open Market Committee, the FOMC, the Fed's primary body for making monetary policy, raised interest rates sharply in 2022 and 2023
Too fucked up.
to elevated inflation. Then, amid progress on disinflation and a rebalancing...
Yeah, this is like a Twitch raid. We're raiding a Fed conference right now.
to make policy somewhat
Their Zoom meeting.
At the last two policy meetings, we held
Oh, right on prevails. What up, brother? Fuck yeah. Goat. You're goated, bro.
Looking ahead, monetary
Here's your time. If you guys want to fuck with reporters, you want to ask a reporter a question, this is the time to do it.
about the
You've got their ear, their hair, they're in there. You want to say, what the fuck, man? Too funny. All right, hold on here.
I will discuss the elements of my economic outlook in more detail in a moment. But first, let me tell you a bit about how I structure my thinking related to monetary policy and the economy. The starting
Spoo's now squeezing higher, taking out all these, we talked about this earlier, didn't we? Get out at the green bar, right?
prices.
Hopefully you got out on the touch on that red bar and you weren't greedy.
So when I say maximum employment, what do I mean?
If you're looking for one more stab at it,
Lowest level of employment,
right here.
lowest level of unemployment,
Drawing it out with crayons for you. Crayons.
unemployment
Right there.
consequences
And right here.
and their families, including lower standards of living and a
I think that's
greater
fairly good, right? Pretty good.
in contrast,
We're going to roll the market down right there. We're going to squeeze right there.
to families and communities that have often been left behind, including
Now you're looking for what here?
and those with lower levels of education.
I'll show you this right now. Get rid of that so we can see it. Keep your eye on the ball right here. You want to see a rejection to go short.
A vital resource in the economy to be deployed more productively, most productively.
There.
Maximizing employment promotes
So you're looking for what here?
and the economy's long-run growth potential. When people can
You've got the high, right?
move to better and more productive positions, it fosters the development of more.
You've got this one over here. This is the last instigation right here.
How about stable prices? Like former Fed Chair Alan Greenspan, I consider prices to be stable when shoppers and businesses do not have to worry about costs significantly rising or falling when making plans, such as whether to take out a loan or make an investment. Since 2012, the Fed has been explicit about the rate of inflation that constitutes price stability. That inflation rate of 2% over the longer run is most consistent with the Fed's price stability mandate. Price stability means avoiding prolonged periods of high inflation.
Ready? If you want to take this short again, you're not short here. You want to watch a failure first.
Inflation is particularly difficult
Down here.
who are least able to bear it.
You want to hit that.
Moreover,
And then a failure with green bars right here. It would look like this. If we can get the short, this is what it'll look like.
which can lead to bouts of higher unemployment.
Ma'am,
Stability creates the conditions for a sustainable labor market.
ma'am. And you'd get in like right here.
Of the Fed's dual.
That's where you enter right there.
I would like to discuss the
Never enter in here. It's too dangerous. Can be very trappy
since the
for bulls and bears. So don't fuck with this if you're a bear unless
review recent history is important.
we can catch that new low right here.
Understanding the current
And that's right about there. 540 and some change.
It is important to recognize the tragic human suffering and loss of life.
And you must stay underneath this red one right here. You got to stay under this.
Described in numbers and charts. For today's discussion, I will describe the economic implications, which were profound.
We break higher.
Be studied for decades.
Trade is dead.
When the global pandemic took hold in the spring of 2020,
this should hold or that should hold.
Or sharply
we'll go up.
Activity. This was especially true for in-person services such as travel, dining out in restaurants, and trips to the barbershop or hair salon.
Look at that beautiful drawings I do.
The screen, or let me describe it. Where
shit is sexy. How do you guys trade without me with you, man?
Some charts to better illustrate economic development. In figure 1,
you guys must fucking hate when I'm not here. Like, I was just thinking of that. Like, the first thing that ran through my head was,
description.
If I'm not here in the morning, you guys must be pissed. Like, where the fuck is he?
But in figure 1,
I want to go fucking short and long, and I don't want to do shit unless he's here.
The subsequent recovery.
It's a good trade, right? There's a fucking great trade right here. It's a fucking beautiful trade.
Recession in NBER history. So,
gorgeous intraday trade.
Recessions, and this is the shortest history, just lasting months.
I just saw that, Ola.
At this time, it will also become apparent that the economic effects of shutdowns in one part of the world were exacerbated by constrained supplies from the other parts of the world.
Well, that's the other thing too, Opa. When we're in low volume environments, the market can fucking move, can't it? It can fucking move. Like, everyone's like, people love volume because they're like, well, that marks a shift in direction.
This general
so people like they want to see like you guys know this. I've told this in the stream before, but not in a long time. So a couple things here. So
central banks set monetary policy to prevent.
Oh my God.
Economic deterioration.
Oh my God, dude! Is anybody in this fucking? Is anybody in this? Is anyone inside of this Zoom meeting right now? It's being rated.
Specifically, cut its policy rate in the spring of 2020.
Oh shit! Someone's inside of this. Dude, what are they doing in here?
Businesses and to foster accommodative financial conditions.
What is going on in this fucking this Zoom meeting?
To support spending and investment.
Oh, they're letting people in this Zoom meeting do whatever they want.
Very deep but short contraction of economic activity occurred. Millions of Americans lost their jobs. Tens of thousands of school districts since.
Oh, I gotta turn this off.
Many of you know something about that.
I don't want to read that shit.
Because of outbreaks and the supply of many goods.
Nope, I just want it gone. Oh, nice penis pictures now.
Toward purchases of goods.
We don't trade gold, we degen NQ.
Sorry. Americans who canceled vacation plans and gym memberships sought to buy exercise equipment and other goods.
Oh God.
And for goods rose.
I can't watch that anymore. I'm out. Watch out, there's a squeeze here. You do not want to see this new high right here. Watch this very close. We're gonna do this together here. I'm gonna show you guys. I think I've been going over this a lot. Yeah. That's what's going on in the Zoom meeting right now. There's a whole bunch of worse stuff being spewed in there too. Yeah, it's Pepe. It's Pepe. He's in there. Pepe's in there. Let's go to the I can't. Some of the stuff I read. I mean, I realize it's shit posting, but I want you to watch this really. I gotta turn that shit off for a minute here. So if you're trading at home, right? I want you to think about this move here, right? So, wham, right? Wham. There's the target right there. That's this guy's way up here, right? So, if this guy's way up here, you know that's where the seller is, right? And I want you to watch this price action right here, how close they're going to bring it here. And what's important about this is, where are the sellers? The seller is here. The seller is also right here, right? Here's the other batch of sellers right here. Make that yellow. Nope, not green. This is why we're talking earlier about where would I prefer to be a seller at, on a larger frame, like, hey, above that, what do you call it? That gap that's over there. But on a smaller frame, little 1 minute frame, right? This is a good thing to be watching, right? You've got batch of sellers here, batch of sellers here. You got the low right here. They took out the low right here. See it? Higher low, lower low. This automatically tells you they're going to sell this fucker straight down to the depths of hell. All right, so it's like giving you information before we ever get there. And the same thing applies right here. We don't know what's happening over here on the right-hand side of the screen. We don't know if we're going to blast down to the depths of hell. We don't know if we're going to squeeze up, do we? So, I drew this in here for you because of why. You want to see if price stays below this white line right here. So does price stay below it or not? And what it does is it gives you a hint. It tells you bulls are weak or bulls are strong. Buyers, right? There's more demand. There's either more demand or there's more supply. We don't know, right? Supply, demand, or excuse me, supply and demand, excuse me on that. And maybe you've got, I don't know, 5 sellers, and maybe you have 10 buyers, but we don't know, right? So we need to watch and find out. Are there more sellers? Are there actually 15 sellers and only 10 buyers? Because we know what happens, right? We'll fill this 10 over here, and then we got 5 more for sale lower, right? And those buyers are likely lower than here, aren't they? So price will reverse to the downside. So right now, you're just watching this closely. You're not in a trade right now. You should not be in a trade in here. This trade can go either way, up or down. And we don't know the answer yet. So what we're looking for here is just, hey, do we get above? Do we peek our heads up? I should get rid of this, but here, hold on. I guess we'll do it like this, maybe. So what you're looking for is, do we push up or not? If we fail to push up here, then the way is lower, right? Lower. If we do peek our heads up here, right, then the trade becomes higher, doesn't it? Make sense? So if we peek our heads up, trade becomes higher. Now the question becomes, let's say we don't have the new high right now, but let's say we do. So we get a big green candle right here, big tick. Get a big fat green candle, wham, right? You would see a reversal, and this takes all your stops way down here sometimes, right? And then your next candle would and should be green, like monster, woof, woof, right there. Does that make sense to you guys? It's like green, poke your head up, down, take your stops, and then wham, wham, wham. So you'd be long down here, right? You wouldn't be long right here, would you? You'd be long down here or looking for that long. So we don't have it yet. Pretty much right there. It's close, but not yet. So Let me just draw this in like this. I'll draw two sides. Hold on. There's one way it could go. That way right there. And then the other way would be where we come up here, fail, right? We blast down up here and then to the downside. I'll show this separately here. Hold on. The way this price action works. I'll try to make this that makes it a little bit different here. Change the color of this stuff maybe. Red. Or and then make this one green. Or it's kind of how this works. And what's important here too is I want you to see the different. Where is the difference? The difference is in the high tick, or the low tick. And the difference up here is the high or the low. So, you know, this would be, I'm exaggerating this, but this would be right there, and this would be right here. And watch how this price action works out right now. Watch this with me. And where are we at right now? So we did not get the new high. We did not get the new high. And we did not get the new high by a penny. You see that? It's by a fucking penny. If you're at home watching candles on a 1 minute chart, let me show this to you. By a fucking penny. Look at this. By a penny short. So price action then takes us down, right? Missed it on this pump right here by a tick. So what are they going to do now, right? They're going to stop hunt down here. You have this low right here. They took it out, right? That's not good. That's bearish, right? And they're going to attempt now to send this all the way down here. Oh, hold on. What they'll do is this: now we're not here yet though. We're still not in a trade right now. You shouldn't be long or short still. The trade is here. Does that make sense? This is where the trade is. You're not messing around in here. Now, sometimes a trade will we fail, right? We make the new low and it straight down. That's about 15% of the time. This one over here is about 85% of the time. And there are other mechanics that are important here. You might be like, well, Cap, I missed the drop in here. But what you're really looking for is just the tick. And the reason you're looking for that tick is because it validates the move lower. So let's say you don't get the, or let's say you're like, well, what if I, like, Cap, I'm expecting this, right? And it only works 15% of the time. What happens the other 85% of the time outside of just not even that? Like, you get the downside move, but it fails to get the new low. That's going to reverse to the upside. So you want to be patient. You know, you're in here and you're just watching price action. That's it. You're just watching this price action to see what it's telling you for information. So let's say you were short right here and you're like, well, bro, what if it just does this, bro? Goes down there, right down there, right? Did you make that new low? Nope. Did the red bar come all the way down here? Nope. That's why you're waiting for that red bar to take the trade. You're waiting for the trigger to go wham right in here. And you have all this information in here telling you stuff, right? And what's crazier too is that you've got this little box right here. You've got this low right here. You would actually expect it to go like this. And then you'd be looking to go lower right here. So you would first see the bloodbath, bam, new low, and then the bulls would fail in here. And this is where the money is, right here. It's where your best trading is, in here. This is like where the rich guys trade, in here. Make sense? People with money. You got money, that's where it's at. And this would actually be lower. This would actually, at that point, they would suck you up to like right there. Something like that. And you'd be looking to stay on trend, wouldn't you? Right down in there. Make sense? New low, failure by bulls, jackpot, baby. Right in there. Brr. And these trades work. Like this leg of the trade works like 90% of the time, 95% of the time, that fucker prints. And to boot on that trade, if you're shorting from right here, you got the low and you're shorting from up here, even if it fails and turns around, you have, this is where your stops are. We start heading lower. Uh-oh, another fake out, right? You're still like in the money up here. Make sense? So you're like, oh, fuck, it's turning around. It's not doing what I thought it was going to do. Get out before you get shit blasted, right? So, like, there's steps to this and why you're doing this. You're just watching. You're not taking a trade. This is a great example because we're not getting a new high. We're not getting new fucking lows. So what are we doing? Up, down, up, down, up, down. There's no decision yet as to where we're going. There's no decision on up. There's no decision on down. And meanwhile, you're getting fucking annihilated in here, right? Like straight up annihilated. So there's no trade in here, is there? Not yet. No trade. Does any of that make sense? You should be able to visualize this in your head. You don't even need these lines. Like I put these lines on the chart here for you because I know you need them. But you can draw these at home if you want. But you don't even need to look at this stuff. Like the time matters, but you can just watch bars. You can just watch, like, that's the prior high, that's the fucking prior low. Are they making a new high? If they do, on any back test, I'm going long. Did they get the new low down here? If they did, I'm going to be sitting fucking just like that. Bam. Downside. Make sense? Downside. Johnny on the spot. Bam, going down. No trade right now. You got it. Who said that? John L. said that. That was figures. It was John that said it. Smartest guy in the fucking room knows. I agree with you, John. 1,000,000%. I didn't know that was you. I had to scroll up to see that it was you that wrote that. I didn't know you said that. I read something about that earlier. Let me see if I can find the talk I read earlier today about this. What did I see here? I had this up for tariff discussion. Hold on here. I saw a good discussion about this. Hold on here. I can find this discussion here. Where did I read? This guy eloquently wrote this out. I thought it was great. See if I can find what this guy said. Maybe I got the wrong one here. Did I have the wrong thing? Hold on here. What was I fucking reading here? Is it this one? U.S. bans government personnel in China from romantic and sexual relations with Chinese citizens. That makes sense. Let's see if this guy wrote. I don't know what this guy wrote something in here that. Where the fuck did I see this? Someone wrote it out really well. Hold on, here we see if we can find it. Nope. Yeah, here we go. I found the article. I'm going to read this to you here. This is actually a really good article, or a really good. Someone was conversing about this. Let me start at the top here and. Yeah, Al Gore slashed 400,000 jobs from the federal government under Clinton through a combination of voluntary departures, attrition, and a relatively small number of layoffs. But he did it in partnership with the agencies and wasn't sued once. Coincidentally, that was the last time the country had a budget surplus. And from what I understand, it was fully transparent. People knew which positions were at risk, and veterans and others had opportunities to transfer elsewhere based on security. With these Doge layoffs, you either get a midnight email or you show up at the office front door and your ID doesn't work anymore. Even supervisors are in the dark until the day their office is gone. So I like this points to the question of I do want to talk about this if I can, because this does impact our economy. Like, this is like the immigrant thing, illegal immigrant thing. If you look back into how many illegal immigrants have been removed from the U.S., you'd be shocked as to who were presidents at that time period that made the most impact with removing illegals from our country. It's not who you think it is. And this applies to where we are with Doge, which is we've done this before. We did this with Al Gore. We cut the U.S. Government employees by 400,000, but it was how it was done that mattered in that time period, where it's how it's being done today. Think about why that is. Critical thinking. Think to yourself, why are we doing it in this method and not like we did in the old method, right? Going through proper channels and proper clearances. No, this looks really bearish. This is good. I like this. This is productive here for bears. Let's watch this closely here and see if they can get it done. So that's the real question here, right? In the Discord, they were talking about, is it a Republican Democrat thing? And it's not. It's an up versus down thing. The haves versus the have-nots. Basically, what it means by up versus down. And as soon as you can wrap your head around that, you can see where populists begin to win, right? Now the question is, Gore did this. He removed. Ready for this? He slashed 400,000 U.S. government employees. So why are we doing it in this fashion? So when I tell you like this whole plan, this whole policy is multifaceted, it's because it's for many different goals, right? We're trying to get a bunch of different goals here, and they have been public about it all, right? We want a permanent tax cut. You got to think to yourself, what do you need to get that permanent tax cut? We want to return manufacturing to the U.S. You got to think to yourself this through. Like, the regurgitation of information is not critical thinking. You can tell when someone is educated or has had a mentor to teach them how to critically think. You can tell. It's fairly easy. People just regurgitate shit to you because they know what 2 times 2 is, right? I know what 2 times 2 is 4, bro. It's like, well, why don't you take that 2 times 2 and tell me something or apply it to something? And they go, oh, I've never done that before. Make sense? And so you have to dig into this stuff and think to yourself, like, why are we doing these things in this fashion? What is the end goal and why, right? And the same thing is with manufacturing, right? If you're talking about bringing jobs back to the U.S., what do you have to do? You have to break the relationships, not just tariffs, but you also need to break the relationships with the countries you're getting these products from, don't you? It's not just tariffs. It's we're going to break this relationship with this nation. We don't want their products here. That's what this group of people is saying, right? Through policy, right? So you have to listen to what they're saying and why they want these things to happen and what do they need to happen for these policies to be implemented. Like, what financial conditions do we need? What kind of an economy do we need? And then how do you reprice this stuff if it comes true? I discussed with you earlier about Apple, right? What are the implications? What's the implications on the dollar? Are we printing money for the dollar or not? Right? Are we making our wealth through a strong dollar? Does it make sense to you? So what's backing that dollar right now? We already know what it is, right? It's free fucking money. We just print, right? Raise the debt ceiling. Print more, right? And spend. And what else happens? The debt that we have, right? The interest on that begins to what? Balloon. It balloons, doesn't it? Let's be honest. Balloons. What do you need? What do you need for stock prices to go higher? Do you know? Does everybody here know? You want stock prices to the moon? 750, 7,500? What do you need? You need the deficit to balloon, don't you? And you need the dollar to be cheaper, don't you? And if there's mechanics in the background making the dollar stronger, can't get that, can you? Does it make sense? Does any of this stuff make sense to you guys out there? I don't know if it does or doesn't, but it's kind of funny now too, because when Gore did that, the Republicans were doom and gloom about it. They were saying it was going to crash our economy. And I want to say a point to this, because John made a point of this earlier by saying up versus inside our Discord, our quant, right? We have an actual quant in our Discord. This guy's a legit. This guy's a professional in real life. I know him personally. I know him, right? And then he was saying it's not left versus right, it's up versus down. And as you can begin to see it like that, you can begin to like open your eyes to everything. And he's saying, yeah, the idea behind Doge, this isn't John, but this is somebody else commenting elsewhere. You see that blood right there? See that fucking blood right there? Now let's watch this price action here. So, fucking predicting what the fuck is going to happen in the future, right? So, this guy says, the idea behind Doge isn't necessarily a bad one. Government agencies should be audited regularly. Reviewing payrolls and necessary labor force for agencies is not inherently bad. However, just going in bombs away, firing hordes of people and slashing spending everywhere without knowing what it is fucking stupid. And I think if you change your argument to that, it would help you, to make a better argument, right? Hey, you know what? I'm open to this. Not just like, yeah, fuck Doge and fuck this and fuck that, but you have a logical answer to that. You know what? I'm not anti what you're saying, but I don't like how you're going about it. Maybe we switch who's going about it. Does that make sense? That's how you get them, right? That's how you get them. You say, you know what? You're right. Maybe we should do this shit, but maybe you're the wrong fucker to do it. And I'll leave you with that. I won't talk much more about it. Oh, yeah, baby. There's that blood. Woo! Go on down. Go on down. Now we want to see if we can break this trend here. You're going to want to see if we can get through this and down into there. You want to just tip the wick down here. A little bit of tip right there. Yeah, right there. It's all you need. And we'll get these suckers up in here. Rain and blood, baby. Inside the Discord, I posted for you earlier the inverse trade today. If you want to see that, you can check it out inside the Discord. Earlier this afternoon, I posted in there about what the 2-date option market looked like yesterday versus today. That it was it was the flip of yesterday into the close. Gone, baby. Bye-bye. And we got the new low. We broke trend there. See how high up this can go now? And go all the way up to right here. Tip of my wick, baby. This becomes red. Becomes yellow. Right there. A little bit lower. Just by a C here. There. Hold on, I'm missing some stuff here. Morgan Stanley on hedge fund flows. As of Thursday, March 27th, hedge funds were sellers of equities across each region via a mix of long selling and short additions. There was a large bias towards buying index level products and selling single names across regions. Interestingly, the bulk of the selling was concentrated in Europe and Japan, whereas activity in North America and Asia, ex-Japan, was lighter in magnitude relative to what we've historically seen. In North America, tech was the most net sold sector by a relatively large margin, which continues the trend of hedge funds reducing exposure to TMT, which began in mid-December. With U.S. tariff implementation likely going into effect next week, we have seen hedge funds adding exposure to some of the more at-risk names and selling the more tariff-insulated names. This could indicate hedge funds are expecting a more dovish outcome rather than positioning for the worst. This just came out. And I'm interested in 2 points about this. I'll tell you what I think about this. I want to know what you think about this. I'll read it to you one more time and I'll tell you what I think. But I did ask the Discord. Let me put a question mark. Question mark. I wrote Morgan Stanley on HF flows. As of Thursday, March 27th, HFs were sellers of equities across each region via a mix of long selling and short additions. That makes sense. So you get herd money, right? That fled from November. It's an amplified herd leaving the U.S., HERD. Herd money leaving the U.S. into other markets. And then the move was everybody was in Europe, right? And everybody was in China, right? Asian markets. And then they're all fleeing now from those markets. Why? Because of blanket tariffs, right? Because you need the world to join in a recession, right? Hedge funds also moved some, or this herd money, some of it came back into the U.S. market. So they're buying these lows here, but not at the rate they should be. So that raises two things, doesn't it? It says that we're close to a bottom to turn higher, that the U.S. markets are where it's at, especially in what? Tickers that are severely impacted by tariffs, right? So if Apple's lost 8% of their value, I think, this morning, not bad, right? So they're testing the waters with, let's say, Apple, and but they're not all in. So that begs the question of that post. If that money is not all in, and you figure Europe's not coming to save the day, right? Asia's not coming to save the day. They hate us right now, right? Europe doesn't like us. Canada doesn't like us. You can't say to yourself, well, you know, they're going to, all these Europeans are going to run over here to the U.S. and invest in our market. No, they're not. They're mad. So we don't have that money. So that could explain away why some of that herd money is not here, isn't it? And what about explaining the rest of that herd money not entering the stock market? What could you attest that to? Could it be that investors are now looking, the herd is now looking elsewhere to invest their money? So where would your money be safe right now? Let me ask you that, the show, the audience. Let me ask you where you think the other money is. And I want you to think this through. If you had money, right, and you need to put it to work, if you ever been through a bear cycle before, that money flees. It goes all different places. Goes into bonds, sometimes goes into housing, goes into commercial real estate, goes overseas, goes all over the place. Gold, you name it, right? Goes different places to outrun inflation and down markets, right? So if we are looking, or if policy from the White House is looking towards what? Returning what? Returning manufacturing to the United States, maybe? Yeah. If that's the case, then you might want to start thinking about what? I don't know. A manufacturer, maybe? That's what? Building a plant or something like that, an industrial space, or maybe the provider of the material for those buildings to be built, right? Or the equipment to be built or whatever. You might be looking to even invest your own money in something like that, right? Bob wants to go and build alternators now, takes out a loan for $200,000-$300,000 to build a radiator shop or an alternator shop. He's like, yeah, we're going to do this. I believe in this. At least for right now, Bob does. So we got Bob the alternator builder now, don't we? We had Main Street Bob. Now we've got Bob the alternator builder. We'll label it him. He's was a radiator. Was he a radiator guy? Was he Bob's a radiator manufacturer now, or maybe he's a radiator builder? Does that sound good? He wants to build radiators, and maybe that herd money knows Bob, and he's like, "What are you doing over there, Bob?" And Bob's like, "Well, I'm building a radiator shop. They're telling me right now. So far, they're telling me that we're going to be buying. I guess radiators wouldn't be a good one because they said they're not tariffing radiators right now, are they? Let's switch it up a little bit. Bob, the cell phone manufacturer. He's opening a cell phone manufacturing plant in the U.S. I know it's comical, but hold on here. Yeah, put that down there a little bit more. We need a little bit more juice here. So Bob, the cell phone guy, that doesn't like cell phone either. Bob's t-shirts. That's even better. Bob's t-shirts. I guess t-shirts probably isn't really where it's at, but we'll call it Bob's t-shirts. So Bob's building a t-shirt factory, and some of that herd money knows Bob. Is the real point here, which is if I'm afraid of what's going to come to the stock market, and I'm afraid of what I'm not going to get paid in bonds or whatever, some of that money might start leaving to invest in manufacturing, leave the stock market. So that comment above here from JPM is important, or excuse me, Morgan Stanley is important. It doesn't mean the markets can't go higher, but it does mean that we don't have the volume that we need in our stock market right now. Even if they are buyers of our stock market, don't expect what? Huge returns in the stock market right now with all this uncertainty. TSM and Intel tentatively agreed a joint venture on chip making, according to information. Well, that's the other thing too, right? The new factories are robotic, but we also need what? People to repair the robots, don't we? Like today's warehouse worker, not warehouse. Today's plant worker is not the same as they once were back at the turn of the century, mid-century. Not most, but today's factory worker has much higher training, and we need those, right? We need people with we need artisans, and we're going to need educated people, aren't we, to fix robots, right? So there are still jobs in those manufacturing plants, but you're going to need to be a little more or a little smarter in certain things, right? Either from a tech school or from a university. Yeah, 100% mechanics. Yep, 100%. And you can speak to, if you ever meet like a UAW auto worker, you ask those guys. I'll tell you all about it. Oh, fuck yeah, Mac. I'm with you, brother. That's one thing I've never gotten into is Warhammer. I was always been afraid of what somebody's saying, long Warhammer tech priests. And like all I can think about with Warhammer is I've never taken that dive because it's so expensive. There we go, baby. Come on down there. Come on down. Come on down. Keep going. Keep going down. A little bit more. Spy now coming down to trade 5,400. I want to warn you here. Here's your only warning. You get one warning. I want you to put a mark on your charts at home on 5,400 down here. We're going to slice right down into it. But what's the rule? The fucking rule. You're out before we get there. You don't know if we're going to slice through. You don't know if we're going to bounce. You don't know if we're going to turn around, right? I guess bounce right there. Slice through. You don't care about any of that. You don't care about any of that noise. So as we start knifing down here, right? We're going to start knifing down here in just a moment. There it goes. But as we start knifing down, do you care about this last leg? Nope. Oh, and there it is. It already happened. I'm warning you. They will fucking destroy you down here. This is where you get fucked. This is real demand down, or not real demand. This is where a huge gamma bar is. Massive. So we'll keep this up right here. Dude, where's all my, hold on, homeboys, I got you. Sorry, I forgot to unmute this stuff. That's why we lost the chat on the main screen. I apologize. So I'm going to leave this with you right here. We're going to watch this candlestick and this yellow bar closely. Apologize out there if your chat is gone. It'll be back up here in just a minute. As soon as you start chatting again. That was 5402. 5402. 5400 is a massive gamma bar. Watch this price action here. We already hit this bar right here. Already hit this one. We're looking to see if we can hit this red one though. Get close to it. You see that? Yeah, you can see that. You guys can see that now. That's good. There's another red bar right there. Oh yeah, sexy. Let's watch it together. Let's watch this now. Let's watch this bad boy. If you don't know, this is the target right here. This is where bears get smoked usually. Not always, but frequently enough. Let's watch this. And I wanted to stay on that screen, but I want you to see this right there. Right there. Right there. You can see that right there. Where are we at? Right here. Remember, we never hit 5,200, did we? Did we slam into that yet or no? We still have, we never hit 5,200 yet. That bar is still down there on ES. There's a wick now over here on that yellow box. Getting really close now. Come on, chameleon. You coming on? Let me know if you're not. We're close. That's pretty fucking close right there. 5,491. That's fucking close as fuck. Let me know if you're still short here. It looks like it wants to plunge, doesn't it? Like it wants to go and just dip its wick right through. Yeah, it's so like this is so tempting for a bear right here. Like a fucking bear just wants to fucking see this fucker knife. I can see why being a bear, you're just like, oh, I just want to hit that big fucking big bar right there. It's that big goddamn bar. Just fucking send it. Plunge it. These are what? Do you guys know what all of this is? This is capitulation. These are bulls that are, I'm out. We're going to crash the stock market. It's all over. These are all capitulation moves here. Oh, yeah. Let's make it big over here. This is a 1 minute bar, by the way. Plunge it. Get down there. Come on. Oh. SPX going crazy right now. SPX, watch out and SPY. You notice the difference here? It's not showing up here, is it? It's showing up here, though. Let me know if you're still short. I don't know if you get it here. I don't think you're going to hit it here. But it tells you we're going there. We're going down here, just not at this moment, I don't think. Maybe end of the day. 6 o'clock, or sorry, not 6. I think you can get it after the bell. Can't get price there in cash market. You sure as shit can get it there after the close. How about this? Here's 415. Remember yesterday, right? When I showed you the structure of the market. About there. Maybe even higher. I don't know if we can get it that high up, but that seems reasonable right there. That one already. That's fine. We did that one. Down there. There's one thing I didn't draw in here you got to watch out for. There could be a wick higher. If we turn up, there could be like this is the body, but a quick wick up here after the bell. This happened to me in the inverse yesterday. I bought calls yesterday, like right here, and then they bled me down here, and then wham, we went straight down. They were bleeding me for like the first 5 or 10 minutes. So just stay short, or now let me check something really quick too. I just want to make sure I'm right here. Oh yeah, we're good. Turning around right now, off of 5,400. You see that upper bar up there? There should be a squeeze here. Be very careful. But jackknife, wham. Just waiting for market close. God, I hate helping bears out. Target is 5430. So right, that's target right there. Right there. Well, these are dealers. They don't want to hit it until after the bell, in my view. They might, but I don't think they want to hit it until like in here. I don't think they want to print it until after the bell. I could be wrong, but we're so fucking close right now. I mean, we're right on it. We're sitting on 5,400 right now, so they're printing it. The question is, can they get it lower and deep in the money down here? When? Do they do it now? Do they do it at 4:15? Do they do it at 4 p.m.? Do they do it at, after 4:15? If it's going to happen, it's going to happen between now and 4:15, so we'll find out if we get it. We're now on target. We are at 40, we're at 5,400 right now. All those puts are in the money. So you have to watch out if people begin to monetize them or not. They're still holding as far as I can see. And this is what sucks about where we are. Like this is, I want to talk to you guys about this. So like, let me show you guys something here. So you guys can like theoretically think about this. So we've got 5,400 put holders here, right? This is a 2-day put gamma, and they haven't closed them. So their puts are in the money right now. And what's unique about this? Is there anything you can think about? I want you to think about something here. They haven't monetized these. Why? Right? So you're expecting, or I'm expecting, a bounce here, right? Under normal circumstances in a bull market, you would expect these to be monetized, wouldn't you? And like this like fierce rejection, right? So let me ask you that. So right where we are right now, we're on 5,400. This is the target. And you got a little bit of monetization, but a whole bunch of them are still in this, like with force. Why? Because no one trusts the market, right? So they're gonna max hold this shit, aren't they? You know what I mean? Like you're getting a little bit, maybe a little bit, but not like close them in a huge ricochet to the upside. So just fascinating to watch is my point. And the reason I'm saying that is because if they're not going to monetize them and they're going to hold on to them, what does that mean? We're likely going the fuck down either into the bell or after the bell down here. They ain't stopping. Everyone's afraid. Everyone's hedged to the tits right now. You ever hear about that? Like the bears will hold their puts until they're worthless. We're right there. They're like, fuck you. These things are going to print right into expiry big time. Yeah, Jules, you don't really have to agree with it. But you have to be aware of it. That's the intent. I'm reading some of you guys are talking about now. Are you my brother-in-law? No, you can't be my brother-in-law. I don't know if you're lying and saying you work for this company, not Tesla. I got people in my family that work for Tesla. Like, this is fucking, is it you? I don't know if, like, it's not like you have to, like, I see some of the comments I see some of the comments that are like, what is one of the comments? Like, people are never happy with no pain, no gain, that kind of stuff. That's irrelevant to me. I really don't care about that stuff. I think that's like arguments for, like, smoking a cigar with your buddy, or having a cocktail with a friend or something like that. Like, when it comes to the stock market, or the economy, or where you're investing your money, where you're trying to hide from this, you have to be aware of the intent. That's important. You can disagree with it. You can say that'll never happen. You can say whatever you want, but that's not really important. And I don't think it matters if it's Republicans, Democrats, a fucking purple dinosaur. I don't care what it is. I don't care. That goes with most things in life, right? Like, will this work or that not work, or whatever? Doesn't really matter in that context. It's kind of like saying Tesla's going to zero, right? Because they're a fraud. That argument, bullshit. If they get caught in real fraud, yeah, it would go to zero. But it's a meme stock. It's traded like one, isn't it? Irrational, right? So it depends on what the argument is. Are we gonna make this motherfucking money into this close or what? Get down there, motherfucker. Get down there. Get on down there and give him the fucking pain. Hit him with the screws. You know what I mean, though, by this? Like, I don't care if this all works or not. Like, I don't care if this Trump plan works or doesn't work. I'm open to it working or not working. I want to be aware of what the fucking plan is, though, right? And if at any point they can't make that plan happen anymore, I want to be aware of it, right? If they see that plan through, I want to be positioned for it. Does that make sense? I think that matters more than the arguing. Well, that can't ever happen, or this will never happen, or that's going to happen, or this is going to happen. Instead, you're just aware of it, right? Okay, so this is what, I don't know, the purple dinosaur wants to do these 5 things. What do they need to do those 5 things? So I have to be aware of, oh, shit, they're doing this right now to do these 5 things. This the fucking purple dinosaur is on point right now. Do I care if I agree with the purple dinosaur or not? Fuck no. I don't give a shit. I don't care if it's a purple dinosaur, a fucking, I don't know, a white Matchbox car, a fucking, you call it whatever you want. And let's just say at some point the purple dinosaur can't get his way anymore. You have to be aware of that too. That's what matters. And that's how you make money, right? So if I just start screaming, well, I don't like the fucking purple dinosaur, or you don't like the purple dinosaur, or I like the purple dinosaur and you don't like it, what the fuck does that have to do with the fucking price of coffee in Denmark? It has zero. What does have weight to it, though, is, hey, we know what they want to do. We're looking for the mechanics of how they're going to do it. And is it viable? And what are the outcomes of that? And then let's say at some point, poof, you see, let's say, in this case, you see, let's say the midterms. It starts sweeping, right? Democrats are sweeping. It calls into question, oh, shit, maybe the purple dinosaur can't get this done. Or let's say they don't sweep. And we get a red tide, right? Is that what's called? A red wave or something. It's all red. It's all Republican. You have to plan for that, don't you? Well, shit. Looks like they're going to get their way. We got to start planning for those outcomes. The market tells you this right now. You can see it in the market. The market forewarns the economy. I don't know if you know that, but that's what it does. It's warning you right now, whether you want to like it or not, whether you disagree with it, whether you think there's going to be a revolution or a civil war or the fuck else. The fucking stock market is telling you today. That's why I always say, like, save that shit for like Twitter, BlueSky. Save it for like Reddit. Get on like Reddit and be like, oh, we're all fucking doomed. But if you're trying to make money, right here, showing you right here. So it's like two mismatched conversations. I always call it, what do I always call it? I call it what? I think I used to call it my trader hat, right? Do you have your Main Street hat on right now, or do you have your trader hat on right now? Are you arguing with me with your Main Street hat or your trader hat? That will fucking kill you in the stock market if you're not wearing your trader hat. And traders will not take you seriously if you're arguing about the price of the stock market with your Main Street hat on. Nobody cares. Nobody. The only people that fucking care about that shit are losers. Because where's the price of the fucking stock market today? It's down. That's the reality. I'm sure there are people that are buying, like myself. I'm in for 73. Well, I'm a little bit lower because of I'm at like 71 and change now, theoretically. Plus, I'm making a bunch of money trading, but I'm at like 72, 70. No, I think I'm at like 71 and 40 cents or 70 cents. I'll have to check because I got my my divvy. But I want you to think about like a trader hat. So when you're making an argument, let's say you're mad. Say you're like, you know what? I don't fucking like pick a politician. I don't like Nancy Pelosi. I want you to always think to yourself, like, am I repeating and regurgitating what I repeat and regurgitate to my wife, my husband, my buddies? Am I doing that right now? Think about that. Or am I taking that hat off and going, okay, I don't like Nancy Pelosi, but she just fucking bought 100 million shares of ticker symbol PORN. I don't fucking like her, right? But she just bought that. So my conversation with another trader should be centered around what? Not fuck Nancy Pelosi. I don't like her. That shit's going to zero because of her. Does that make sense? Hey, Nancy Pelosi just bought that fucking ticker, man. 100 shares, bro. Or 100 million shares, bro. That shit's going up. You know she's an insider. That shit's going to moon. You get the difference here? And then you take your trader hat off. You go back home. You see your husband, your wife, your friend, your neighbor, your best whatever. And you're like, you know what? Fuck her, right? I don't like her anymore. That's the conversation you have with those people. Does that make sense? So the conversation that I have with my wife has nothing to do with the conversation that I have with you. Why is that? Because they're two different things, right? If I told my wife this dot is going to happen, she'd look at me like I had fucking 10 heads. She had no idea what I'm talking about. Because when I'm talking about stock market implications, right, of policy, implications of the economy and that kind of stuff. You know what I mean? And if you specifically too here, I want you to think about the little man out there, right? The little guy. The little guy that doesn't have insurance, doesn't have a 401k, doesn't have a pension. You know, he doesn't make a lot of money. He's getting eaten alive right now. That guy's angry, or that gal, they're angry. You can go right on Reddit right now. Go to Work Reform. Go any of those subs. They're huge. There's angry workers everywhere. Now, whether they agree or disagree with politics, this is real. So if I was to speak with some like janitor, they're not going to have any fucking clue what I'm talking about in relevance to the stock market, right? You're going to be like, oh, what the fuck you talking about, man? All I want to do is get a better pay and things are cheaper, and I don't give a fuck about where Apple stock is going. I only care about my job, man, paying my bills, owning a house, that kind of stuff. So it's always important to remember the conversation or the people that you're having that conversation with. It is not about, hey, fuck them and fuck these people and fuck those people. Because the price of the fucking stock market is trading right now $5.36. You understand? And so it's a different conversation. I'm not mad or anything. I'm just like, it's important to simplify this stuff. If you have a perspective and you're talking about the stock market, try your best if you can to be from the perspective of a trader and not like what I talk to my fucking neighbor with when I drink beers with him. It's a whole different conversation. I have different conversations with my normal friends, my normal family. Hey, I don't like this. Hey, I don't agree with this. Hey, this isn't going to work. Fuck this and fuck that. But that has nothing to do with the fucking price of the stock market. It's got zero. That's how you get eaten alive, when you can't take those hats off and put them on. And it's brutal. I don't like being in this side of shit. Like, I don't want to be here listening to Trump every fucking day. You think I want to do that? Fucking like, it's like a drill in my head. But I got to. It's my job. I work in the stock market, right? I trade the stock market. So I got to suffer through it. I don't want to hear it. I don't want to I don't want to acknowledge it, but I have to. Part of trading. It's the only way you survive. You don't care who's in power. You don't care who's being the trigger. If Trump was gone tomorrow, it could be fucking, I don't know. It could be jobless claims, right? All of a sudden, we're all experts on jobless claims. A year from now, it could be, I don't know, oh shit, Jerome Powell's leaving. And all of a sudden, he is the reason that the market is going up and down, right? So all of a sudden, we're all focusing on that, right? Okay, we all got to become Jerome Powell experts. And we got to listen to Jerome Powell all day long. Oh shit, we just invaded Iran. Okay, fuck it. We got to put on the Iran news now. Because they're using that as a trigger, right? For either a bottom or a top. Tell me what the news is. Who's doing it? Who's telling me the news? Like, is it something positive or spun negative? We must be at a bottom or a top, right? And so it switches from thing to thing. But instead, what we do is we get into fighting with each other on this one subject. Think about that. Let's say the subject matter is jobless claims, or I don't fucking know. Pick anything. Unemployment rate. Do you guys all fight with each other and don't make up ever again? Because you're like, yeah, I don't like that guy because he likes Jerome and I hate Jerome. You're out of your fucking skulls. It's being used as a fucking inflection point. That's it. You know, make sense? I don't know if that makes sense, but it should. It's like, and instead we all get heated. We're like, I don't like that fucking guy over there and his thoughts. Like, fuck his thoughts and your thoughts. Just think about when we're at major lows and major highs, when whoever is triggering the reversals, you just want to hear it. Yesterday was a point in fact was yesterday. Trump comes out yesterday, he just goes, fuck everybody. We're blanket tariffing everybody. What did the market do? Fucking straight down. Right? Depths of hell. And it could be anything. Could be anything. Could be anything. There will come a time when this isn't the topic of conversation. This show will actually shift away from that conversation at some point. People will be like, well, I liked this show before when they were talking about politics. I had people in this chat going, I used to like this show when it wasn't talking about politics. We should go back to that. I'm like, you know what? We're going to fucking shift away from that one day, too. And guess what's going to happen? Guess what's going to happen? Take a guess. People watching this show are going to go in the chat and say, I used to like this show when it was about politics and the stock market. And I'm going to say, sorry, that's not the trigger anymore. We're moving away now from this. Now we're on, I don't fucking know, green balloons or popcorn. You know what I mean? Because all of a sudden that matters. Like, okay, popcorn matters. Price of apples going down today because the new popcorn came out and everyone's raging about it. Well, let's become popcorn experts. We gotta find out why the fuck popcorn matters. Seriously. Let's see if we can plunge this fucker down after. We after the bell now? God damn it. Okay, we're done. 412. Give me one fucking more tick down. All right. I'm going to end the show here in a minute. I expected us to at least get this one last red bar right here. They're just not doing it. Not going to do it. Wouldn't be prudent. I wish we got that green bar down, but it's not happening. They'll likely do this after the bell. So just a quick recap here on today and expectations for tomorrow. Oh, by the way, a couple things I got to tell you guys. Cool stuff. I've got a bunch of crap for my new setup. I'm going to be able to put this stream on, barring, of course, bullshit with like flooding and whatever crazy ass weather is going on. But I'll be able to now, or after this weekend, we're going to try again this Monday. I should be able to do a second private stream for members. This is fucking awesome. You might not be as excited, but what really is awesome about this is I don't have to sit on the show all day long and regurgitate. I can do a private stream. I can turn this fucking thing on right here, right? Go whoop. And I can go do another show privately for you guys, and we can do all kinds of cool shit. We can look at stocks. We can look at education. We can look at investments, how we can do separate investments, all that, like so much cool shit. Like not answering dumb questions, not dumb, but you know, you guys know, right? Like, hey, I popped in, man. I haven't been here all day long. Recap everything for me. Like, I like to do it once and be done. And so if you guys are always watching the show and you're members, you guys care, I can just fucking put this thing on fucking like on cruise control, and we can go do our own thing in another video, which would be fucking awesome. Like, hey, we want to trade UNH today, or hey, we're going to trade gold today, or gas, or whatever. It's fucking awesome. So I really look forward to that. Having this office, it's coming along. It's looking great. We've been like running all kinds of new Cat 6 and shit, and you guys funded that. So I'm looking forward to being able to have like Mondays for education, making videos, editing the videos, and having on this channel, we're going to have like videos. So they'll be like, hey, this is what a stock is, and this is what a share is. This is what this is, and this is what that is. This is how you trade like this. This is how you trade like that. So you guys can always reference this stuff. You're like, what the fuck is Captain talking about? Like, oh, bro, he's got a batch of videos over there, right? Or what is John L. talking about? What is David AMS talking about? What is Condor LVR talking about? What is whoever? What is Winky fucking Face talking about? He's long this fucking stock, and we'll have a video about it. So you guys ever notice when I'm like, hey, man, we're going to look at this stock right now. We're going to make videos in a separate stream. They'll be edited, and they'll be condensed. So if you're like, hey, Cap talked about ticker XYZ, there should be a fucking video. So you guys can always reference it. This is where he wants to buy it. This is where he wants to sell it. This is where he's saying no. If it goes lower, we're waiting for lower. Check your market conditions. As a matter of fact, Captain Jim James got a whole fucking bullet list of what he wants to buy stock. So it should be really cool. I'm really looking forward to it. So that's the first note. Second note would be expectations. I gave them to you earlier today, right? I gave them to you earlier today. And we're going to talk about that. Oh, yeah, get on down there. You like, look at this. They're going to do this when you can't pay it out. This is bullshit. This is fucking bullshit right here. Okay, so, I mean, seriously, just give me the fucking jackknife down. So a few things here. We got to take a few of these things away. It's just, I don't want to delete all this shit because it's all valid. I hate doing this. So every night and morning I do this thing. It takes me like an hour and a half, and I have not had the fucking time or the internet. God damn internet. Like, hold on here. Just get rid of all this stuff here. Just to give you guys a heads up. I want you to just remember that the market is pinned right now. Okay? Captain Condor, whatever his name is, he has parked this market sideways. Even though he has parked this market sideways here, even though he's parking it, you're like, oh, what about all this, Cappy? This means nothing. This will be like a wick. Make sense? It'll be nothing. It means nothing. The trade is higher. The problem here is that we're stuck. You never, like I told you this earlier in the stream, but when you trap bears in, right, on a squeeze, they don't let them out until the end of the week. They don't let them out. They kill and murder all these fucking bulls. Whoever was owning calls in here, they're going to murder these people as long as they possibly can. So here's Friday. Here's Monday. The trade is higher. Okay. It's right there. Trade is higher. In my view, still there. It's not down. And I don't really care about any of this stuff. I don't even care if we blood down overnight. I just care about that move up. Now, there are some structural issues here. Not structural, but hold on a second here. Get rid of that. No, one. Shit can that. We have another leg coming, and I want you to be aware of that other leg. Like we got some downside coming over here. We're not done, and we're likely going to also smash into this one down here. Make sense? So I want you to understand 2 or 3 things here. One, you've got sellers here, right? You've got sellers somewhere in here. If they trap us in here and we can't get sucked up into this, you will then become a seller here for that downside move. Now, they're trying to slip us down there right now. You see it in these after hours, but this is more of a pin than anything. This isn't real. These are just 2-date puts. That's it. Just 2 days. Now, if this turns into something more, we'll know more next week. I don't think we'll know today. Moment those puts are monetized, we get sucked back up here again. Does that make sense? Now, if we come in the next week or something and they got us roped in here, we haven't moved, we'll talk about more downside targets. I just don't see it right now. This looks more like pinning action than anything, not real doom. But ultimately, I want to give you a warning. Ultimately, before the end of April is over, price targets 525, 520, somewhere in here. And this one down here would be extra. I can't rule this out. Okay? So just pretend that's not there. This is definitely on board. Whether we go higher first or not, I either want to be a seller up here or I want to be a seller right here, but I don't trust right now. I don't trust this because this is pinning. That's all that's meant to be. I'd rather see like 5,200 P's. Does that make more sense? Maybe putting it like this. I want to see 5,200 P. If I see that, I'll get bearish, but I don't see it. So no one's buying these yet. So this right here to me is garbage. I would need to see a trigger to buy 5,200P to get bearish here. Excuse me, to be getting bearish in here. Yep. I would need to see people buying 5,200P, but I'm not seeing it, so it's not yet. We likely still do the squeeze and then come back down. If conditions change, I'll let you know. And if let's say you're targeting this, if you're targeting this downside move here, don't be buying fucking 500 fucking P that expire on fucking the 28th of April. Okay, don't do that shit. Always be tactful and always take your money and run, because I'm going to show you 2 scenarios here that can really fuck you. You're like, okay, bro, here's my 500 fucking P right here for the 28th. And then they ram your ass up here. Now your shit is worthless. Or they take us down only to right here, and then we reverse and we're out of here. Fuck your 500p. Like, you need to be tactful. Down, right? Up, down, right? Up, down. And you need to be in it for this stuff right here. This is where the money is. All the money's right there. It's not in this piddly bullshit over here. Don't be getting caught in here. This is how they fuck you every single time in there. Like, I can't tell you, fuck you, fuck you, fuck you, fuck you, fuck you, fuck you. That whole trend, that downtrend. So, and we're on that downtrend. You see it? Fucking downtrend right here. This is where they fuck you the whole way down. Even though it looks tempting. Oh, I just want that big crash, Cappy, just like that. Don't do that shit. Save that shit for, even if you miss it. Trust me. Even if you miss it, it's worth missing. If you woke up tomorrow and the stock market collapsed and fucking just cratered, that's not your trade. I can't tell you how many times people fucking say this shit's gonna happen up or down, and it doesn't. So just be like careful with that kind of shit. Even if you get left behind, if you're a trader, I need you to understand that you need to be consistent until it doesn't work anymore. Consistency means more than, I don't know, moon or bloodbath. This is where the money is made. Inconsistency. If we get new consistency and start heading higher, your money's being made there. Consistency. Never in this kind of shit. We make an outsized move or something like this. Well, fucking, you live in here. That's where the money is, right in there. The rest of these fucking people are fakers. They lie. I'm telling you. I got friends like this. Like, I have real friends in real life. Like, dude, I was up 30,000. I was up 100,000. They made this big trade, made a fucking $250,000. We crashed or we squoze. I made all this money, and I thought it was going to happen again. Right? That's that hindsight vision, hindsight trading, right? I was lucky, but you didn't know you were lucky, rather than just saying, man, I was lucky. But let's think about that really quick. Like, listen to this really quick. I was lucky, man. Right? Let's look at this really quick again. So this asshole right here happened to be short and got lucky. That same guy is going to be looking for that here, 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 and here. He's going to get taken for a ride, taken for a ride, taken for a ride, taken for a ride, and give all that fucking money back. It's a story as old as time in the stock market. You always want to stay in there, stay in there, stay in there, and you're just taking your money and you're out. Taking your money and you're out. Taking your money and you're out. Start moving higher, see the break higher. Oh shit, we're going higher. Start taking money here, start taking money here, start taking money here. You're this guy, that guy, on whatever time frame you're on. It's like, oh, I want to see the big crash over here, Cappy. Don't bother. It doesn't matter. This would be a better buying opportunity if we crashed than it would be a sell opportunity. Okay, I want you guys to have a great afternoon. I'll see all of you guys tomorrow. I don't have any more stormy weather here, but I do have flooding. I woke up this morning at 4 or 5 o'clock this morning, and my internet was out. I woke up this morning, I had no internet. It was like gone. Well, not this morning, but like early morning hours. I don't foresee that happening again, but it's possible. We have real damage done in Michigan. I don't know how bad it is. My neighbors are moving their shit out of their basements and stuff today. Like, all my neighbors are outside moving shit around and stuff, and they're pulling out their washers and dryers and stuff like that. Mine wasn't as bad as others, but I did lose power. Or I didn't lose power this morning, but I lost power yesterday. But I did lose internet this morning, and that was a problem. I don't foresee any more problems this week, but if I do see anything, or if I do have problems, please bear with me. I apologize. I want you to know something, that we do this like nobody else does this. There is nobody out there that's out 8 hours a day, sitting here with you all day long. It's 5 days a week, every day of the market that they can be. So we are going to run into technical issues from time to time. They're rare. I don't think we've missed many days this year. Last year, I don't think we missed any, maybe one or two. And this year, I don't think we've missed a full day yet. So we do try our best. So I am going to run into issues. It's just a part of what we do. We're not CNBC. I don't have millions of dollars to have a backup of a backup of a backup, like dedicated fucking line coming in my house directly from ATT or whatever. I just don't have it. So I apologize for those interruptions. So I will see all of you guys tomorrow at 9 a.m. If you're a bear, congratulations. If you're a bull, keep your chin up. You're believe it or not, you're better off where you are here. I don't want to. Let me talk to you about this. This sounds crazy, but bulls are famous for chasing tops, and bears are famous for chasing bottoms. They give their money away. If you're a bull, this is not a bad place to be. It's a pretty good place to be as a bull. Even if we're in like recession risk or crash risk or any of that kind of stuff. As a matter of fact, that blue line will be 20%. We're going there right now. This is a 20% move. So we're not doing a 10% or 12% move, are we? We're looking to bottom down here and turn around for a move to the upside. Anytime we have a crash, it always bounces. Every time. Even COVID. Dude, I was there at the bottom during COVID. We got the Fed put. We made one more fucking knife to the downside. And I want to tell you this. We started turning up. And we did this like big back test day. And I can't tell you the number of people that told me it's going down farther. And my own friends were buying fucking stupid puts. Stupid amounts of money. Hundreds and hundreds of thousands of dollars, and they got annihilated. They gave every fucking dollar back. So be open to the turn. We're closer to a turn than we are to down. It's not going to go down 20%, then 30, then 40, then 50. Then that's not how this works. That's not how it works. So just be open to a turn. Keep your chins up if you're a bull. If you right now are a bull and you're not feeling good, that is the wrong stance for you. I got to tell you that trading is left-footed. You should be in the opposite side of your fucking feelings. I'm sorry to teach you this, but if you're not feeling good, that's good. I'm being honest with you. If you're a bull right now, you should be happy. If you're not happy as a bull right now, something is wrong. More than likely, you get caught on tops. So I'll see you guys all tomorrow at 9:30 in the morning. I appreciate you all being here today, and I look forward to seeing you again. And hopefully, we learned a little bit about trading today, price action trading with candles and stuff like that.